Africa is
and
evolving.
change.
Businesses
Yeah?
are moving
And so
faster.
please welcome to the
Governments are
stage
transforming.
Global
Financial systems are
CEO
becoming
of
smarter.
Concentrix,
These systems are
Chris
not limited. Don't just
Caldwell.
keep up with change.
Caldwell?
Be
Caldwell.
committed. Follow to the gates.
Caldwell.
Innovative fintech and
Caldwell.
enterprise
Chris Caldwell.
solutions
That sounds better.
empower organizations.
Thank you so much.
Thank you, thank you. Thank you very much. I know I'm just after lunch, so we'll try and wake up the audience a little bit because I'm sure the food is sitting heavy. So by way of quick introduction, let's see if we get the slides up. I'll start anyhow. I'm Chris Caldwell, the president and CEO of a company called Concentrix. We are a global organization that operates in a little over 75 different countries around the world with around 450,000 headcount around the world. And our goal is focused on bringing technology and services together to help large brand name organizations service their client bases around the world. In fact, if we can bring the slides up, I'll show you all about it. When we think about our service organization as a whole, and we think about the type of talent that we need around the world, to us, we're very, very, very focused on where we make investments, because when we put in investments into a country, we're generally within the countries within 10, 20 to 30 years. In fact, some of the longest countries have been in almost 40 years that we've been in. Within Africa, we've actually been investing fairly significantly for the last number of years. And we operate with around 50,000 people within Africa. Sorry, there we go. Servicing around 2,000 clients globally. We actually are a Fortune 500 company doing a little over $10 billion of revenue, so have significant scale. So let's talk about where we are in Africa. When we think about over our 50,000 people within Africa, we've actually just started in Ghana within the last 3 years. And why is this important is because when we think about our presence, the speed of investment that we've been able to realize within Ghana is exceptional, and the growth within Ghana has been exceptional. Within Ghana, we've been able to grow to 1,200 people within literally 3 years, 2 locations, with the ability of growing around 60 to 70% per year. The only reason that this can happen is, 1, access to an incredibly strong workforce, which we're able to tap into. 2 is having that workforce educated with technology as well as ability to service customers from around the world. We service Europe, we service North America, we service Asia-Pac from Ghana. 3, having the technology infrastructure in place. So not only are we able to drive sort of the tech learnings from our team within the Ghanaian marketplace, but we're also to help upskill our team within the Ghanaian marketplace. And within our Ghanaian marketplace right now, we're starting to develop a very strong reputation with some global brands of high scalability, meaning that our belief is that we can continue to grow at 60 to 70% within Ghana for the continuous years. What does that mean from a people perspective? One of the things that we tend to do when we have to go into countries is import management. Within Ghana, we've been able to find local management. In fact, within the last sort of 18 months, we've been able to promote over 100 individuals into senior management positions, which is, when we look at our global footprint, something that's very, very unique. We're also able to do impact sourcing, which has a very positive impact in the community. And this impact sourcing, again, is highly educated people, maybe disadvantaged in one way or another, who are able to come into the workforce and build out, and allows us to take that labor talent and actually populate in other countries within the region as we drive our growth within the African continent. We're able to provide high-end technical support within Ghana. So these are people who have had university degrees in computer science. These are people who are very passionate about technology in their own right, and we're able to bring those people into our organization and help them build careers within our organization, supporting these global brands within our clients. And then lastly, one of the things that's very important to us is community. Our attrition levels within Ghana are exceedingly low, some of the best within the continent of Africa. Our ability to upskill and train people, as I've mentioned multiple times, is also incredibly high, giving a very, very robust and deep labor pool that all the investors should be thinking about when you're looking at making investments in Ghana. Our belief is that over the next couple of years, we're going to continue to build within the Ghanaian footprint, not only data capabilities, not only more technical capabilities, but also a well-educated workforce that's going to continue to drive customer service, customer engagement for our global customers within Ghana. We're also going to be able to kind of leverage the infrastructure from more international clients from North America, from the right price point, from the services that we're able to offer out of Ghana. And we see that being able to be done not only from the scalable labor pool, also from the government support that's being able to be put in place, also from the tech infrastructure that we're finding within the country, just naturally that is there, and the connections with where we do business with our clients. So we're incredibly excited about continuing to invest in Ghana. We're incredibly excited about growing our footprint in Ghana and see it as one of our key strategic locations, not only within the continent of Africa, but also in our global footprint of over 75 countries around the world. And with that, I'll pass it back to the committee. Thank you very much.
Perfect timing. Perfect timing. I like that. In fact, it was early. Perfect. The message was delivered. And what I love most is, as I said, I've got Ghanaian cousins that have really struggled just to, they've done the work, they've gone to university, and there's no job. So it's really good to see investors invest in our future, Thank you very much. Thank you very much for that. Next, we have a panel focused on infrastructure and trade. Think about what Lord Paul Boateng was saying. Keep that in mind as this panel's going on. We're going to turn now, as I said, to financial gaps, deploying structured and transformational national infrastructure, railways, roads, those kinds of things. Now, guiding this panel is a seasoned international trade expert who serves as the head of West and Central Africa at UK Export Finance. I've known him for, I think, more than 10 years. More than 10 years, we've crossed paths. Deep understanding of exports, credits, risk mitigations, and, of course, transcontinental trade and all it takes to get the deal done. He's going to take the stage now to lead a session on building new bankable pathways for trade and infrastructure finance in Ghana. Please welcome Stephen Gray, OBE, and please moderator, and also the guests, please come on stage and you'll also be introduced. Thank you so much. Thank you so much.
Thank you, Michael. And if my panelists can join us on the stage, please. Just whilst they're doing that, ladies and gentlemen, good afternoon, and welcome to this panel for the new path for finance and trade and infrastructure in Ghana. As you've heard this morning, this is an important conversation because Ghana is at a moment where ambition, necessity, and opportunity are coming together at this very moment. Ghana is seeking to position itself not only as a strong domestic economy, but one of the principal trade and logistics platforms for West Africa, and dare I say, gateway. But that ambition depends on roads, ports, energy, water, housing, digital systems, industrial infrastructure, and financial architecture that allows all those assets to be built, operated, expanded over time. Roads are not only roads, they are trade corridors. Ports are not only ports, but they are gateways not only to the African markets through the AfCFTA, but to also other global markets. Power and water systems are not only utilities, they are foundations for productivity, manufacturing, agro-processing, health, education, and urban developments. And digital trade finance platforms are not only financial tools, they are mechanisms for making Ghanaian businesses more visible, credible, and more financeable, and for capital to flow with less frictions. So the challenge is not whether Ghana needs infrastructure. That is clear, it definitely does. But the deeper question that today on this panel we will explore is how do we finance it in a way that is sustainable, bankable, investable, and capable of creating long-term value. We're very fortunate to have a panel that brings together different but complementary parts of that financing ecosystem to explore that question. And if I can ask my panelists to introduce themselves one by one. Richard.
Hello. Can you hear me all right? Yes. Okay, so good afternoon. My name is Richard Agbenu. I'm the Chief Commercial Officer for Ghana International Bank. Ghana International Bank has been in the City of London for 66 years, and we've been quietly supporting Ghanaian businesses and also expanded into Africa. Thank you.
Good afternoon. See if that works. You can hear me? Okay, great. Good afternoon. I'm Heike Hamgat. I'm EBRD's Managing Director for... You can't? Okay. Sorry. Is that better? Yes, that's much better.
I love it.
So apologies. So hi, I'm Heike Hamgat. I'm EBRD's Managing Director for Sub-Saharan Africa. For those of you who don't know who EBRD is, it's the European Bank for Reconstruction and Development, and we are headquartered here around the corner in London. And this is our latest expansion, and I'm super excited because Ghana just applied to become our 80th shareholder. The application is in the Parliament, and I'm really excited to talk a little bit about infrastructure solutions that we have now started to implement from Lagos to Nairobi to Dhaka, Cotonou, or Abidjan, and about all the exciting opportunities we see for investments in Ghana. Thank you.
Good afternoon, everyone. My name is Ellen Ohinia-Fuakwa, and I'm the Managing Executive for Corporate and Investment Banking for Absa Bank. For over 100 years, we've been partnering corporate and investment banking institutions to empower Africa's tomorrow. We really pride ourselves in being a bank that understands risk mitigation, structuring, and empowering the growth of businesses in Ghana. I'm excited to be here. Thank you.
Good afternoon, everyone. My name is Socrates Afram. I'm the Chief Finance Officer for GCB Bank, the first indigenous bank in Ghana and the largest in Ghana today. GCB Bank was formed to promote indigenous businesses and also to promote indigenous individuals, because at the time GCB came onto the scene, it was believed that indigenous people were not being supported by the foreign banks. In this case, I'm talking of then Standard Chartered and then Barclays Bank. And so GCB has played that role, and I must say that we've happily coexisted with them. We compete, we cooperate, we work together to underwrite transactions. That is GCB Bank for you.
Hello, my name is Nana Jumo Bene, and I think I'm the only panelist who knows everybody on the panel. So hopefully I can see in between whatever you say. I run Ghana Infrastructure Investment Fund. It's the youngest company on the panel. It's a fund that was set up about a little over 10 years ago by the government of Ghana, mandated to catalyze private sector funding into key infrastructure projects in the country. And so we're very excited to be here because infrastructure is the latest buzzword.
Thank you very much, panelists. And as you can see, we have both international, domestic, DFIs, and dare I say, sovereign investments organisation in GIF. But panelists, we've heard today that Ghana's ambition is to become West Africa's leading trade and logistics hub. From where each of you sit, what is the biggest constraint today that you see in that dream being realised? Ladies first, perhaps.
Well, it's quite interesting because 15 years ago I sat on a panel and I was asked the same question, and I'm going to give the same answer, unfortunately. I think I like to be practical. We can talk about the likes of infrastructure. Of course, it's important. Capital is important. Risk is important. But the thing is, if you want to be a leading West African hub for trade and logistics, how comfortable are West Africans in your country? There's a saying that when there is free movement of people, goods move freely. So if West Africans are comfortable with doing business in our country, trust me, we will be that West African hub. Now, what are the things that we have to do to make that happen? That includes things that have been talked about this morning, but even simple things like, we are surrounded by French-speaking countries. How do we make the French-speaking countries comfortable when they come into Ghana? Yes, I'll leave the technical part for all the people on my right, but I think we have to talk about some of the basics. When people are comfortable doing business in the country, trust me, they would bring their business. Now, having said that, at Ghana International Bank, we see this happening. We see some of our customers that have taken businesses from Ghana into Burkina Faso, into Cote d'Ivoire, and we see that flow happening. We would like to see it happen more often, but I think we have to start from somewhere. Thank you.
So maybe I speak a little bit about some of the technical things that we feel ease countries becoming hubs of in logistics and in trade flows, while fully agreeing that you have to make your neighbors comfortable so that your neighbors want to trade with you. But I think it's also all of these instruments coming together that makes a location successful. So we need the short-term trade. We need people taking short-term risk with correspondent banks around the globe to help pre-export and import financing. So we need some short-term liquidity that's reliable every day for everyday trade. But then, of course, trade also requires these very long-term investments in infrastructure, in ports, where you ideally want to bring together global, regional, and domestic expertise, and you want to have a lot of very patient capital, so being there really for the long run and for the long haul, I think. And then you need I think trade is a little bit sometimes like a racehorse that gets really nervous easily and spooked, as we've seen now with places like the UAE that, has such a center of trade, I think. But so it is really about reducing the frictions in good times, because none of us can predict when the bad times are happening that have none of our faults. But so reduce the frictions in good times so that, these fast-moving goods can really move quickly. So I think, yes, the Africa Free Trade Agreement is a great step, but I think lots of the fellow panelists have been talking about implementation also for a while. We need to accelerate the implementation in good times. We need to make sure that the connectivity between rail, port infrastructure is invested in good times, so then that we can all have more resilience when shocks arrive. Maybe I stop here.
Okay. Ellen, Socrates, just picking up on a couple of points there. Richard said the same question was asked 15 years ago, and he's given the same answer today. But we've also heard short-term risk and reducing friction during good times. From where you sit, from 15 years ago to today, do you think those are the real issues, or is there something more fundamental that's causing the question from 15 years ago to be presented again today?
Thank you, Steve. Let me respond by saying that the question of movement, it looks like there's no political will on the part of our governments to sign up for free movement of goods and services and people on the continent, because as of now, even the AfCFTA, several governments have not signed up to it to facilitate the movement of goods in Africa and also to facilitate payment.
Ghana's not one of those.
Ghana has signed up, but most of our neighbors and most of our brothers and sisters on the continent have not. But on the technical side, what I would say is documentation. Documentation on the import side, we have a huge challenge with SMEs when it comes to documentation. I have colleague bankers here, the CEO of the Ghana Association of Banks is here. We've had a number of interventions. It's still a big challenge. So banks are ready to support, but the documentation to come to support banks' financing and also meeting regulatory requirements is the biggest challenge I see. On the export side, standards and certifications. Most people will come show you products they want to export elsewhere. When you interrogate in terms of being certified from the destination countries, it is almost always lacking. Apart from few companies who are able to scale, that the most SMEs struggle. And that is the more reason why banks are unwilling, in most cases, to finance such trade transactions.
And Ellen, is that your experience as ABSA?
Okay. From where we sit, there's enormous opportunity out there. The biggest challenge is structuring, getting the bankable transactions to really close. Why do we say this? There are instances where investors don't include the banks at the early stage for us to bring out the risks so that we can put together mitigants. So it's important that we all co-create from the beginning to ensure that the right mitigants are put in place. Structuring is the biggest issue. Then also tenor. There are instances where investors would want to use short-term funding to really do a long-term project. And this is where we need the DFIs, the insurance companies, to come in. So we work together to solution the clients. We need long-term funding. Example, if you want to process 50% of our cocoa, we need to put up factories. And you can't put up a factory within 3 years and get returns within 3 years. We need long-term funding to really come in. Then also, we also need to look at digital trade. How do we support all these investors to really go out there and trade locally, regionally, and internationally? Because after you've financed, and at the end of the day, there's no output or outlet for these trades, how do you get your money back? So for me, in summary, 3 key things. Risk mitigants in place during the structuring, the right structures, and also we need to make sure that we have the right off-takers to really buy the solutions or the products once we really are able to produce. Thank you.
Thank you, Ellen. So, Nana, yes, please do. So Nana, you're in the space of infrastructure, and GIF have done some amazing work in supporting the creation of the gateway platforms with the investments in Takoradi Port. We've also seen MPS, a UK-registered company, invest over $1 billion in expanding Tema. What are you seeing as the key constraints for developing yet further?
Well, thank you very much, Stephen. I think over the last 10 years or so that GIF has been in existence, we've been privileged to being part of some successful infrastructure projects that was able to attract some of the patient capital that Ellen is talking about. We've seen how that has panned through, and after 10 years, some of the key lessons that have come out are very clear to us. The issue with us is that most of the time when you speak to investors and you're trying to catalyze funds, it is not for lack of capital. Yeah? Most of the time, you are not having to argue with them about the availability of the capital. Most of the time, they want to see what your project pipeline is and want to see whether there's been a well-prepared feasibility study that has been done. And it captures part of what my colleagues have been saying as well. One of the things we found characteristic about projects that we normally originate is that we normally rush over that first phase, which is the project preparation and the feasibility, and go straight to talk to investors about bringing in the financing. What then tends to happen is that it increases the risk of the performance of the project. Because at GIF, most of the projects we deal with are meant to be self-financing, so there's no recourse. The project has to be able to pay for itself. And so we have to make sure that we articulate very, very clearly the aspects of the project and what we believe makes that project bankable. And we have to make sure that it is a detailed piece of work so that any mitigations are well thought of at the beginning rather than during the project. Because the main cause of cost overruns and project stalling is mostly because the first preparation had not been done properly. One of the other things we see is that for most entrepreneurs in our side of the world, they normally do not have the funding to do this feasibility because it is quite expensive if you want to do a proper feasibility study. So most of these entrepreneurs have very good ideas. They are bankable from the pre-feasibility stage, but in order that you get to the full feasibility stage, some amount of investment needs to be made to ensure that you don't fall into issues going forward. So if there's a constraint, I see more of the pre-investment capital rather than capital post-financial close. Because once you get to financial close, you normally get good people or good money chasing after a few projects. But we are now trying to encourage that pre-investment phase, the basics that we are speaking about, to make sure that we tick the right boxes in the beginning to ensure success.
So project preparation is a subject quite dear to my heart. And just turning back to EBRD for a moment, you know, the clue is in your name, reconstruction and development. But so what are you doing in terms of the project preparation space in financing and technical support to allow developers to actually build them to a bankable standard that would make the commercial banks comfortable? And how do you address the time consistency risk? Because you know the need is today, not in 3 years' time, when it can take as long as that to prepare projects.
No, absolutely, and this is often exactly the challenge is the different patience of the different players in the system. So yes, as EBRD, we do have our own project preparation facility, which is in principle sort of a framework where, you know, there's a fast-track way of getting legal advice, technical advice, engineering advice, and then this cost, there's a little bit of upfront cost to the government, and then the government is paid back in full by the winning bidder. So it's like a nice cycle, and of course we're trying to have this cycle as fast as possible, but in a complex project, that's still 18 months. And I still remember I moved to Egypt, that was before I moved to Nairobi, and everyone was talking about desalination for tourism, that's crucial, there's not enough water in Egypt. And then there was, so we said a little bit what prices for desalinated waters globally and how long it takes to prepare a PPP for 10 desalination plants at the Mediterranean or at the Red Sea. And then the Egyptian government turned around and said, no, 18 months, that's too long. We're just going to talk to the big Egyptian and global construction companies and have bilateral negotiations, and they're going to give us a better price in a shorter period of time. This was my first week in Cairo. I was like mega depressed. All my Egyptian bankers, she like actually my infrastructure banker, Hannah, she did this really amazing presentation about PPP and desalination, and I just thought, oh my God, we just did all this effort and nothing, you know, we will do nothing about it. But she said, no, wait, you know, you just have to be a bit patient with the government. Now they're going to go around for like 3 to 6 months and talk to all of the companies and try to get a better price and and most likely they will come back because they will not be able to get a bank that is closing the deal, that will take the currency risk, that will take the project preparation risk, even if it's and none of the DFIs will be there. And lo and behold, 12 months later, the government came back and said, look, maybe we do one like you wanted. Hannah's presentation was really good. Let's do one at the Suez Canal and do one desalination and a PPP. Let's go and let's see what price we achieve. And ultimately, the price was actually, that was achieved was cheaper than they had thought they could bilaterally negotiate initially. And it was for all these hotel complexes that are close to the Red Sea. So what I wanted to say with this a bit, Froster, is that governments are impatient at the beginning, and they always feel you are too slow as a development bank. But what I like about EBRD is that governments own us. So Ghana has now applied to become a shareholder. Egypt is a shareholder. So it's a give and take between the two of us to say, look, we're trying our best for you. You are our owners, but this is what it takes. And I think then to be a bit more patient at the beginning, tying back into project preparation really pays off in the end. And you attract more capital, you get better pricing, you get more value for money, you get everyone more comfortable with the process in terms of bidding. And then if you do even your advice and structure early on with the banks, then you will have the nice sort of summary of local banks, regional banks, DFIs coming together and help you finance. But I think you need to overcome this initial discrepancy between the patience of the government and the patience of what it takes to develop a complex project.
Thank you. Your story reminds me of the true definition of PPP: patience, perseverance, and persistence. Just turning back to the Ghanaian banks, what would make you more comfortable in supporting infrastructure-linked businesses? Because we're hearing capital's not the problem. We're hearing the DFIs have appetites and ambition to support more, particularly as the government is their shareholder. But what about yourselves? What are you looking for to be more comfortable in supporting infrastructure investments?
Yeah. Thank you very much. As Nana mentioned, the feasibility studies should be well done, and the project should be well structured end to end. We don't start a project and halfway we then realize that there's cross-border risk, there's FS risk, or there's maybe geopolitical risk or something that needs to be factored in. We need to structure from the onset and make sure that all the risks are factored in and mitigants are put in place. We also need to make sure that for us to finance the projects, we need to be part of the conversations early. Then also, we need to ensure that we have off-takers and markets ready for the projects. There are lots of capital looking for projects. And as was mentioned this morning, Assets under management alone is over 100 billion in Ghana. And I'm sure with T-bill rates moving from 28% to 4.6%, banks are looking for an outlet for their capital. We're ready to finance projects. We're ready to really support the transformative growth of the economy. What we are asking for is that we need well-structured projects. And how do you get the well-structured projects? Involve us. Let's pick through it from the initial stage and make sure that we are really putting in all the mitigants. You can't cover everything, but at the end of the day, if the banks are in from the onset, we'll be able to help make sure that the projects are bankable and also see through to the conclusion of the projects. There are lots of projects that starts and never ends because the feasibility wasn't made right. And also, the total costs and others, there were no, should I say, they didn't factor it into maybe currency fluctuations and all that. Currency risk is real. Thankfully, we've seen some stability in our currency, but if you're going to do a project that has foreign components, you need to have risk management solutions built in there to make sure that you don't really halfway through the project end the project there because currency has moved from 10 to 17, as what happened some years back where some projects have to stall. So for me, in summary, we need to really work together, make sure we have bankable projects, and at the end of the day, we need the DFIs in, we need the insurance companies in, we need the banks. Then also, we need, at the end of the day, the marketing team, because when you have the products and at the end of the day, you can't sell, what's the value in there? So I think we need to work together. There should be a lot of collaboration so that we can really go out there and finance bankable projects. Thank you.
Socrates.
Yes, thank you, Steve. So I'll add to what Ellen and both Nana mentioned. So in terms of some of the risks that are associated with infrastructure financing, this morning we got assured from the governor of Bank of Ghana that he's seeking to build a 15-month import cover. That is reassuring. And hopefully that will be built over the next, call it 2 decades. If that is done, one of the key risks that is associated with funding, especially by foreign counterparties, FX availability, FX volatility will be taken away. The political risk, how do we build the framework such that projects will go beyond administrations? And that, I think, we are more than capable of doing so. And so when I tie in the issue of getting the bankers involved from day one, with these 2 main measures I've mentioned, what it means is that private capital can be unlocked to develop infrastructure. Maybe government can do the PPP by way of funding the initial cost that nobody is sure about, doing the feasibility, going through the procurement, picking the most efficient contractor to develop the road. Because the banks are there, in terms of the flows, how we charge, how we collect the tolls, the banks will take charge. And also, because we use people's money, which is not goodwill, it's fiduciary, we need to make sure we pay the right price. That is to say, over time, if things change, the frequency with which we change the tolls, quarterly, half-yearly, or yearly, we should be ready and willing to imbibe that into the project. Because truth is that uncertainties will continue to exist. Crises will keep coming. It could be this today, it could be that tomorrow. When those things come to the fore, how do we insulate the project? How do we make sure that we collect enough tolls so that in the rainy season, we have some buffers to cover shortfalls in repayments? I believe if we did that effectively, government needs not put money into the infrastructure, even those ones that have been fully built. So the big push ones that are being done today, once they are fully done, we can monetize, give it to the private sector, pay $1 billion, run the road for, say, the next 10 years, 15 years, 20 years, and recoup your money. Once we build in those things, people will be confident enough to support, because at the end of the day, every investor's aim get my money back, and get a bit of return. And I believe if we did it that way, we'll be better placed to unlock private capital. Thank you.
Thanks, Richard. Socrates. Before I come to Richard, just go back to you a moment, Nana, because Socrates mentioned something that was very important there, political risks. I've been a strong believer that if you're going to do work in Ghana, you need local partners to manage local risks. What role can GIF play in being a local partner to UK investors that would look to do business in Ghana?
Thanks, Stephen. To the UK investors wanting to do business in Ghana, from the perspective of GIF, we live in the best of times. GIF has been mandated to set up special purpose vehicles for projects, which means that when, as an investor, you come into a country and we're doing a project, you're doing it under a limited liability company's balance sheet. And so you are sort of shielded from any sort of political change. And we've proven that over 10 years, because there were projects that, GIF was set up during His Excellency President John Dramani Mahama's first term. There are projects that were originated then, and they have lived through the political lifestyle, and those projects are still there. So in terms of how the setup is done, it is set up very much as private sector led. As President Mahama said, government will facilitate these projects, but not lead. And therefore, GIF's mandate does exactly that, where we actually set these things up as private sector to be able to make sure that there's enough. The second reason why it's a good time is that for once, we have the commercial banks looking favorably onto projects. And I say that as an sort of ex-banker, where I used to be lazy as well, but at the moment, because of the single digits, there's no point in being lazy as a banker anymore. And the good thing about us in terms of how we can set up with banks is that we can blend the financing. Banks will go typically up to 7 years. We can go up to maybe 10, 12 years. And so we can look at projects that effectively blends that financing and allows room to make it bankable over time. So for an investor who is coming in to say, I'm bringing in the equity, what's the other side of it? We can effectively work together to blend that financing to make sure that we get into bankability. The other thing I'll mention is that GIF over the last few years have been working really hard to get ourselves accredited to the new forms of financing. So I talk about climate and nature-based financing. We're just about to get accredited by the Green Climate Fund. We're working with the Global Center for Adaptation, and that effectively gives us access to other pools of funding, which hitherto we didn't have access to. And there are a number of great projects that we can look to do. For example, Ghana is full of mangroves. And in terms of development of mangroves, we can take advantage of the carbon market there. And that can do a lot in terms of aquaculture, fishing, etc., and help the livelihoods. That's why we are so grateful to the British government under FCDO, who have given GIF project preparation facility, which His Excellency the High Commissioner was talking about this morning, because that allows us to bring a number of these projects to bankability. So for the investors who would like to come to talk to us, I would say come to talk to GIF, because we can be the gateway to be able to blend funding from our partners in the country, and also to assess other pools of funding which hitherto was not available to us.
Thank you, Nana. Richard, just coming to you, Ghana International Bank sits in quite an unusual space. Ghanaian owned, 100%, regulated here in the UK, and really is in that nexus of financing the trade corridor, connecting Ghanaian exporters and fintechs with the UK banks and financial institutions. From your experience, what is the real bottleneck you're seeing in the UK-Ghana trade finance space?
Right, so two things. I mean, before I answer that question, let me just chip in on this one about, structuring. I think structuring is really key, because we have had a situation where a borrower has come to us from Ghana and says, look, I want long-term funding to buy certain assets. And we've looked carefully at the asset, we looked carefully at what they're going to do, we've talked to the supplier, and we've been able to structure using trade finance, cutting the cost of the project and helping the borrower to save money. So sometimes borrowers just, they have some preconceived ideas that, look, if you want some kind of asset, it should be long-term. Go to the bank, sit with them, talk to them properly. They'll help you to structure. That is what I'll say. But on the question you asked me in terms of what is the constraint, the way I answer it is, we have to look at, between UK and Ghana, what is the main driver of trade there? Financial services is one of the key drivers of trade. Now, if financial services is one of the key drivers of trade, then risk perception comes in here. How do UK investors perceive risks in the Ghanaian market? That is where banks like Ghana International Bank are very important, because we understand the UK investor, and we understand the Ghanaian borrower, and we are able to put the two together. We are able to structure transactions in such a way that it looks good to the UK investor to put funds in. We are able to bring parties from various, across the board, from DFIs and even institutions in the city that would typically not look at African companies or Ghanaian companies. We've managed to bring them on board. So risk perception to us is one of the key areas, and that is one of our ways, or that is one of the key challenges we face in trying to get the investors to perceive the risk in a very different way.
I'll come back to perception a bit later, but in terms of promoting more UK-Ghana trade, what is Ghana International Bank doing in that space today?
I think the first thing I'll say is that Ghana International Bank is here to stay. There are some banks who say they are here to stay, but when things become difficult, they are no longer there. Ghana International Bank is there to stay. I recall in 2022, when things were hard for Ghana, which bank was the only bank that was confirming LCs, that was giving out credit? Ghana International Bank. So Ghana International Bank is here to stay. But we do quite a lot, in terms of, I've mentioned the structure and all the things that we do. But one area that we also find that is important, and is a bit linked to the risk perception, is capacity development. We do a lot of capacity development. We actually do conferences, seminars, and I'll use this opportunity to invite you to our Converge conference, which we are having in August. It's very insightful. If you want to invest in Ghana, please join our conference. So we do quite a number of things in that space to help investors or boost their confidence to be able to invest in Ghana.
Thank you. I'm being given a 5-minute warning here, so let me just go to the point that you just talked about in terms of perception, and this is an open question for the panel. What is the difference between perception and the reality of the risks? Is there a gap? And if so, how do we close that gap of perception of risk to the reality of risk?
I think there is a difference between perception and reality of risk. I think it's because perception is always about generalization. It's never about looking deeply into the exact opportunity, into the factors. And its perception is also, I feel, it's something looking from the distance. And then you perceive something that you don't know, you don't have the details of, you don't know exactly. So I think what I think is important also for us as an institution that's headquartered in London is the presence in our local markets, is having experts in each country. So the expert on trade finance and the Nigerian, the Kenyan expert on long-term infrastructure project finance. Because, if we want to get to the real risk of a project and not the perceived risk, and for that, you have to look closely. You have to come closer, you have to get closer to the investment opportunity, and you have to invest in human capital that understands the investment opportunity closer. So I think I see a key difference, and I think that's why everyone has to become more local in the understanding of the opportunities, but also of the risk, to overcome any bias that comes from perception, to really look at the details.
Thank you.
If I may.
So, Nana, before you answer, I just want to add an extra point on this. GIF is on a 10-year journey, and you're about to exit some investments. So you're probably in the best place to talk about the reality.
Well, certainly, Stephen. After 10 years, we have a couple of projects which have matured enough for us now to look for exit opportunities. And as I've said earlier, my friends here are looking for good projects to exit to, so we're working together with them. But the biggest opportunity I find at the moment, to your perception thing, is that there's a perception that projects in Ghana or in Africa are risky. And therefore, people want to put a risk premium on it. Sure. And one way we want to try and change that narrative is working with partners to come up with an infrastructure credit guarantee scheme. It's been done successfully in Nigeria, it's been done in Nairobi, and in other parts of the world. Now, if we're able to set up an infrastructure guarantee scheme, what it does is that it effectively de-risks some of the projects that we have, and then we can go to the local bond markets and the local pension funds so that they too can start to invest in it. We talked about a 100 billion fund or pool of pension funds that we have in Ghana. So we're working with PIDG, we're working with AFDB and AFC to set up an infrastructure credit guarantee scheme. The way it works is that when you put the scheme together, that scheme on its own is rated, independent of the country rating. And therefore, if I have a good project in Ghana, I could go and get the guarantee scheme to wrap around it and go to the market and get participation locally and internationally, effectively reducing that perception of risk down. And we think that once we're able to do such things, we'll be able to first de-risk it, and as the projects are getting successful, that perception that projects in Ghana are risky will start to decline.
Thank you, Nana. Just very conscious of time. Just for one last comment from each of the panelists in terms of what is the one message that you want people in the room today to go away from this panel session before we open up to the floor?
Okay. Yeah. I want members in the group to really go away with the perception that, of the reality that, one, banks in Ghana are ready to really support infrastructure growth. And I remember meeting the governor when he came in. He said that before he leaves, interest rates will come to 10. But governor, it's below 10 now. Okay, so we have the liquidity to fund projects. Banks are looking for bankable projects and will support you to structure the projects. We have the expertise, and we really need to grow together. We have a role to play in the transformation of the Ghanaian economy. And we'll be happy if investors can speak to us. We'll guide you through the risks, the mitigants, and together we can get projects that will help in the growth of our economy. Ghana has significant opportunities, and we look forward to welcoming you to Ghana to work with you as banks to ensure that you meet your objectives and ambitions in the right way. Thank you.
Thank you, Ellen.
Yeah, Steve, thank you. So just to add to what my colleague Ellen has just said, banks are ready to play ball. And more importantly, let me add this point. Banks are ready to do long-term projects. Technically, most people will tell you that banks cannot go beyond 7 years, 10 years. That is normally not the case. It's the bankability of the project, the predictability of the cash flows. Why do I say that? You go to a bank, and then typically my colleague bankers here will bear me out. You tend to see that of your current account, saving accounts, 60 to 80% is stable over the years. They don't go anywhere. And so if I have predictable cash flows around the project, I can commit that portion of the funding over the long term. The challenge has been, tomorrow, if there's one crisis or the other, how do I get my money back? And that is what makes banks shy away. So to the point Nana made, blending the funding, banks are ready, because without banks playing an active part in the funding of projects, the nation will not go anywhere. And so investors, you are welcome to partner us to do that. Thank you.
Yeah, can I just, so in 66 years ago, the founding fathers formed Ghana International Bank, former GCB London branch. And what they wanted the bank to do is to perform a financial intermediary role. That is very relevant today. for UK investors, if you want to invest in Ghana, I think your first point of call is Ghana International Bank. Come to us, we will speak to you, we will point you to the right place, we will open the doors for you, we'll show you the opportunities, we'll structure and we'll work with you, and you can leave smiling with a good project in hand. Thank you very much.
Thank you, Richard. Competition starts.
So moving along from the competition, what I will say is that for the investors here, we are interested in partnerships. We're just not interested in just the investment, but we are interested in partnerships, be they in the form of EPC partnerships with our local content, where there's transfer of skill, etc., and shared risk in there, or be in the form of co-creating these projects through some sort of project preparation where we both sort of contribute to that early development to make the projects bankable so that we can all sort of make money out of it. Those are the kind of partnerships that we are very interested in. And just to assure that we do not have a lack of very good projects. Under the President's vision, we have the 24-hour Economy and Export Acceleration Program, which you'll hear about in detail tomorrow. There are quite a number of impactful, significant projects that are there. Under the Big Push initiative through energy and transport, there are a number of very good projects. We want investors to come and sit around the table with us so that we co-create this thing together and find a way that it will be mutually beneficial, but more importantly, there will be some sort of transfer of skill to enhance our own population as well.
Thank you. And last but not least.
So I think I'm taking the team approach. I think I want you all to think about football. Because I think I want you to think about that investment in long-term project is like playing a really good game. Sure. And I'm not saying this because also the president of Ghana already has mentioned this, because the World Cup is upcoming, because of what happened to Arsenal. No, I'm saying this because this is a team sport. This is a team sport. So, you know, the private sector for me, it's the strikers. These are the ones that want to get the project done, that want to score the goals. And all of us, we're sitting somewhere in the midfield. We allowing like these. Sometimes the best is the short passes, the trade finance. Sometimes we need the 20-year long-term DFI money coming really long pass to the strikers. Sometimes we need a really well-structured midfield. But we don't want to be sort of just having an elegant game with nice structuring. Sure. We want to have an efficient game. We want to have a game that wins. And then we have the insurers that are really at the goalkeepers. We do need the government. We didn't speak at all really about the government. So because we do need the rules, because a game without rules is chaotic, but ultimately also not as good. And we need all of us, the civil society and the people in the country, as the fans who really make the project work and really buy into the success of the project. So I think my final word is just all think about football.
Thank you very much. Our MC is a real taskmaster. He's not opening the floor to questions. So let me just say this. You know, there is one conclusion from this panel, that Ghana's infrastructure and trade finance challenge is not resolved by one single institution. It cannot be solved by the government alone, by the banks alone, or even the DFIs, or by the private sector. It requires a joined-up ecosystem. That is the challenge, but more importantly, that's the opportunity. Thank you very much, and hands together for our amazing panel.
Thank you, man. Do you want to take a picture? Do you want to take a quick picture? While I introduce next, you guys can take a picture. I think it'd be good for your LinkedIn and Instagram. I love that football analogy. I'm not sure if we want a, PSG Arsenal Champions League final, if that's what we want when it comes to infrastructure, or we want a PSG versus Bayern Munich 5-4 extravaganza. But I don't know what's going to get us behind the line, get those goals in the net. But honestly, that's what we need. We need all the defense and midfielder strikers to be able to score goals. We know we talk a lot, but we want implementation. We want things that actually get done. We want the goals. Because it's funny, I was just messaging my cousin in Ghana. I said, have you heard of Concentrics? Like, yeah, I used to work for them. So you see, the connections are still there. People that are creating employment in Ghana. So I hope you have a much better understanding of the real opportunities and infrastructure, but also the challenges and how we can all work together to make sure we are scoring Champion League goals. Our next speaker is going to do a quick presentation. Let me find her. There we go. Okay, so our next speaker is the CEO of the GSE, Ghana Stock Exchange. As the CEO, she brings decades of experience, corporate finance expertise, and she's behind a driving force in the modernization of the exchange, successfully making local equity and debt instruments accessible to global portfolios. Please give me a rousing round of applause for the CEO of the GSE, Abena Amwa.
Good afternoon, everyone. It's amazing that there's still so much energy in this room after lunch. Greetings from the Ghana Stock Exchange. And I'm here today to just share a few words with you, giving you an overview of the exchange, some of our key challenges and opportunities, and how to participate in the market. The Ghana Stock Exchange runs two main platforms. An equities market that was set up in 1990. So we are relatively young compared to London, set up 35 years ago. And our equities market today has a value of 263 billion Ghana cedis. On that market, we have the main market for large companies such as MTN. We have the Ghana Alternative Market for SMEs to raise capital, exchange-traded funds market, as well as an OTC market. Our second market is the Ghana Fixed Income Market, which has a value of over 250 billion Ghana cedis worth of instruments on it. The dominant products on that are the government securities, treasury bills, notes, and bonds. We also have a limited corporate bonds market, a commercial paper market for corporates to raise up to 270 days money, and a green and sustainable segment of the market. Our market is an automated trading platform. We use Infotech of UK's platform, as well as the Bloomberg eBond platform. We are ISO certified to two standards, information security as well as business continuity. We have an automated depository clearing and settlement, which we co-own with the central bank and which uses the Montran system. And we have licensed all the banks in Ghana, as well as 28 brokerage firms, to trade on our equities market and on our debt markets. What is our mission? Our mission is to run an efficient market that supports Ghana's transformation by providing access to capital and investment opportunities. In terms of international recognition, we are a highly regarded market. We are full members of International Capital Markets Association, the largest fixed income market trade association with over 630 members globally. And I'm happy to announce that I'm the first African who serves on the board of the ICMA, and also have just recently been appointed as chair of all the regional committees of ICM. We are full members of the World Federation of Exchanges. We are quoted in the FTSE Frontier Markets classification. We are members of the African Securities Exchanges Association, where I'm vice president, and where key projects to link the markets, including the African Exchange Linkage Project, that will facilitate raising capital across all of Africa, as well as trading in securities on the $4 billion plus market cap of all African securities exchanges, including Joburg, Nigeria, Ghana, Kenya, etc. We are bringing together through technology and platforms. Our market, ladies and gentlemen, and here, I don't want to say it, but I'll quote what Bloomberg said on May 15, 2026. The Ghana Stock Exchange Composite Index, as at that time, was up 63.4%. Currently, it's about 68%. And Bloomberg says we are one of the world's top performers in Africa and second only to South Korea. GSE returns so far this year is second best in the whole world. Ladies and gentlemen, in 6 months, we have seen 3 IPOs. And that is after 7 years. The last IPO before December was MTN in 2018. And in December, in February, and in 2 weeks' time, we will have our 3rd listing on the market in IPOs. Is this a fluke, ladies and gentlemen? I dare say, and I'm happy to tell you it's not, and I'll tell you why not. There are key opportunities for all of us to look at. And again here, I really need to congratulate our Minister of Finance and our Governor of the Central Bank and their entire teams for giving us an enabling macro environment. Without low inflation, low interest rates, stable currency, none of this will be possible. The economic transformation we are looking for won't happen. We are busy building domestic capital in Ghana. We know the challenges we face when international capital markets shut us out. It calls on all of us to make sure that our domestic capital markets are strong enough for us to attract international capital, which can come and go. But if our foundation is strong, then regardless of people's entry and exit, our economies stand. And so that's why we're excited to see our pension fund industry grow and today have 100 billion Ghana cedis of assets under management. But importantly, what we look at is our regional capacity. When we add what the pension funds in Nigeria can do, then the opportunities for us are even bigger. But there are more investment opportunities for you. Sometimes people say there is no money in Ghana or in West Africa. That's a fallacy. Last year, over $10 billion left our shores in Ghana to invest in crypto assets in other markets. In Nigeria, over $30 billion left. And so it behoves on us to collect this money and importantly, show them investment opportunities to look at. And so we've been working with the central bank to bring more banks to take up the money. The problem we have today is the supply side, not the demand side. So just as the previous panel was talking about, projects, companies to invest in. And that is why we are also excited to work with the 24-hour economy to look at how we increase domestic ownership in all the projects that need funding. Again, we are working with governments around state-owned enterprises, the commercial ones. Too many of them become drains on the public purse, not returning profits, not operating at the best governance levels. And so we are working with government to bring more SOEs to the market to give investment opportunities to our nationals and, of course, the international community. Many of you would have heard the big announcements out of Nigeria, the Dangote refinery listings. Again, it's an opportunity we are working on with our regulator to see how we make this an offering open to West Africa. So, ladies and gentlemen, I just wanted you to see this graph, which tracks the performance of the market. Sometimes I say COVID was a blessing in disguise, and definitely the DDEP was a blessing in disguise. You see the performance of the GSE Composite Index and the Financial Index very flat, and then suddenly we heard that government securities were not as risk-free as the people had believed in. And so the market started correcting. And that is the steep rise of the market. But this is underpinned by very structural reforms that have happened. Sometimes people say a market doesn't react to what's happening in the market, or we don't react to news. But you'll see since about 2024, the market is going up. And every time we've been down, it's because we faced an economic crisis, DDEP, a power shock, etc. But over the long term, the Ghana Stock Exchange has really provided very strong returns to investors. Here's a little comparison with some of our African markets for last year, and again, the GSE was a very strong performer there. I was talking about access to capital. To see First Atlantic Bank come to the market and raise 742 million cedis, followed by Zen Petroleum, raising over 640 million cedis, and now Casapreco in the market, raising over 700 million cedis. All of these IPOs have been significantly oversubscribed in 6 months, with a big pipeline still coming. It's something we are all very proud of. But of course, we are not a perfect market. We have challenges that we are working on and addressing. The lack of listings, and I've told you about the SOE projects, the bank listings, and we are addressing that through a GSE Academy that hopefully will be working with the London Stock Exchange to support us for a pre-listing academy to bring more companies there. So those of you who are here looking for capital, I'm happy to tell you that the GSE is a place that you can come and raise patient capital, long-term capital, equity, debt. You can raise up to 10 years, 15 years, money on there. You can raise short-term money through commercial paper, and we had our first commercial paper issuance last year by a cocoa buying company. That was actually a sustainable instrument. The low liquidity that we have, we are aiming to drive through products and services, which we've listed there. Low investor participation. Gone are the days where people want to walk anywhere to open an account. And so we've been working with our partners to launch apps and platforms. And I'll share just a few of them with you so that you can participate on the market directly. Capacity is a big area for us. Getting our brokers on, our investment banks on ability to structure deals, work with the boards of companies that need to list to become investor ready. And finally, the last one for us is a favorable government policy. We are working, hopefully, with the Minister of Finance to grant us a capital gains tax waiver, as well as the withholding tax waiver, to encourage more participants in the market and boost the returns for people on the market. For us, the opportunity really is now. But I've shared some of the important links for you to go to, and I said I'll show some of the apps that you can go to invest on the market. There's IC Wealth, there's the CD Manager, there's Achieve by Petra. These are just a few of them, but if you go on the SEC, the GSE, the NPRA, and the Bank of Ghana website, you will see some of the listed licensed firms whose platforms you can use. I can say that all the banks, all the 23 banks in Ghana have very strong platforms on which you can buy at least the fixed income securities that are on the market. And for me, this is the story. The Ghana Stock Exchange is ready. On our fixed income markets, as you can see, in 2025, we traded about 245 billion worth of securities. And this statistic is as at May, we have done more than half of what we did last year. The market is growing, investor appetite is growing, and we are ready for business. Through our tech platforms, last year on our equities market, on average, we were processing about 30,000 trades going through. For the same period in April this year, we are processing 200,000 trades. And it tells the power of empowering the average Ghanaian by putting a tool in their hand. They are looking for investment opportunities. The beautiful thing that MTN Ghana, through government policy, came onto our market and gave the Ghanaian an opportunity to invest in the success of the business, making sure that today, 30% of MTN's mouth-watering dividends, which unfortunately I can't buy into as CEO of the exchange, stays in Ghana, goes into the pockets of the average person on the street to enable them pay for their childcare, education, and other needs. This is the partnership that we want to continue building with the government, with the private sector. Ghana is open for business. Come join us. Thank you.
What a powerful, powerful story. That chart is how I want my life to look. Just up. That's what it was. Personal wealth, success. What a beautiful chart. So, as she said, we can all take this into our personal portfolios. The slide was there. I hope you took a picture of it. Okay. Typically, what you find in most summits is that after lunch, all the dignitaries leave. No, we still have some great people in the room. We have the governor of the Bank of Ghana still in the room. I see you. We have the president's advisor to the 24-hour economy in the room. We have the deputy Ghana High Commissioner. We have the deputy manager of Ghana Commercial Bank in the room as well. The director for diaspora affairs. Can I see you wave? There you. I see you. And the director for the Black Star experience, that tourism experience. There he is as well. So please do make sure that you engage. They're still in the room. We can still get deals done. Okay, the message has been delivered. Okay, our next presentation is someone with, again, so much experience in primary markets across the Middle East and Africa. She represents the London Stock Exchange. Her extensive experience assists African companies in scaling globally. Builds very nicely onto this one, right from the heart of the world's premier financial hub. She's going to take the stage now to present how Ghanaian businesses can leverage dual listing and global capital structures through the London Stock Exchange. Please welcome Abi Ajayi. Abi Ajayi, are you here? Abi, are you here? She was meant to be in the room. Okay? She might have stepped out. We keep it moving. Going once, going twice. Do we have Emmanuel Amar Kofi Bois in the room, just to make sure? No? Video. Okay. Should we play the video now? We'll play the video now. Hopefully, I've called her out twice now. She's not been in the room, so we'll get you to listen to her. So we're going to go to a video now, which explains to you some beautiful things. I'll be right back.
Every day in Ghana, millions of movements unfold, powered by something greater. But behind every tap, every transfer, there is a system working quietly in the background. This is where GIPS comes in. The Ghana Interbank Payment and Settlement Systems, the backbone of Ghana's digital payments ecosystem, powering interoperability, connecting banks, fintechs, and institutions, enabling seamless transactions across platforms.
Welcome to the world of GIPS. GIPS was established by the Bank of Ghana in 2007 to partner financial services industry to develop and manage efficient and secure payment systems. Our role is simple, yet critical to Ghana's payment transformation. We provide interoperable infrastructure that connects banks, fintechs, mobile money operators, enabling them to deliver digital payment services to their customers.
GIPS is an enabler, a trusted infrastructure built to connect everyone. At scale, the impact is undeniable. Millions of transactions processed daily, a rapidly growing digital economy, an ecosystem expanding across every region. GIPS is not just enabling payments, it is driving financial inclusion, fueling innovation, and strengthening trust in the system, empowering fintechs, supporting financial institutions, creating opportunities for millions. And the journey doesn't stop here. GIPS is ready to connect beyond borders, to integrate with switches across Africa, to power the future of payments on the continent.
The future of GIPS is to be the enabler of choice to our partners. We will continue to deepen our role as Ghana's digital public infrastructure, powering seamless, real-time, and interoperable payments at scale. We will build resilient, reliable infrastructure that enables banks, fintechs, mobile money operators, as well as digital asset providers to innovate and expand their businesses. Ultimately, GIBS will remain the platform connecting the ecosystem, driving inclusion, efficiency, and the future of digital financial services in Ghana and beyond.
Ghana interbank payment and settlement systems, because when payments work, economies grow, businesses thrive, lives improve. Partner with us, build with us, connect to Ghana's trusted payments infrastructure. Ghana Interbank Payment and Settlement Systems, GIBS.
How do you say it? I'll just spell it back in.
Yeah, and city.
Every day in Ghana, millions of movements unfold, powered by something greater.
Okay. We've got two more panels left. I think two more panels left. So we're on the home straight. Stay with us. Energy is going to be high. We need that vim, yes? So our next panel is going to be on the fintech, unlocking financial transformation. And to welcome our moderator, I would like to welcome to the floor Debo Oshunboye. Please welcome to the stage, and he'll introduce his guests. We're going to have 40 minutes of conversation on fintech in Ghana and how it interconnects with Africa. So please welcome to the stage. Thank you so much. Round of applause.
He's moderating. What is
The fun.
Ladies and gentlemen, I think we're just waiting for the panelists to get all connected with their microphones, so just give us a few minutes.
Over.
I think we're waiting for the last person, I believe, so. Thank you.
I know.
Right. So Ghana's fintech ecosystem has matured into a 300 billion mobile money powerhouse with 26.7 million active accounts, 5,900 agents worldwide. The government invested well over 50 million fintech growth funds. The Bank of Ghana, National Payment System Strategy, and forthcoming VAPS bill provided regulatory clarity and growth capital. For the UK investment, Ghana offers a scale in payment, digital lending, and insurtech, alongside a growing talent pipeline through the 1 million coders program. Ladies and gentlemen, I have my panelists here to discuss these initiatives. From my right, I've got Mr. Philip from Bank of Ghana. I have Dell from Web3 African Group, and I have Regina from Africom Group. I have Clara from Ghana Inter-Payment Settlement System. And finally, I have Mr. Wereku from Bank of Ghana as well. So maybe I'll probably ask each of these panelists to kindly introduce themselves and also tell us exactly what they do. I'll start with Mr. Philip. Thank you.
All right. Good evening, everyone. Good evening, colleagues. I think I would start by saying I'll call this team Huddle Gang. If you didn't laugh, then I guess you don't know, you're not well informed in the crypto space. So now I know the kind of audience I'm working with. Right. So my name is Philip Kwao Sebuabe. I'm a treasury and then a blockchain expert. I've been in this space for over 10 years. My career has focused on bridging traditional finance and then decentralized finance. I'm currently the head of the virtual asset department at the Bank of Ghana, and I lead Ghana's supervisory and licensing framework for the virtual asset service providers. Thank you.
Thank you, Philip.
Thanks. Good afternoon, everyone. My name is Moses Sule. I'm the CEO of CSLP. CSLP is a remittance company. We also hold an FS brokerage license, so very happy to see that we're talking about diaspora remittance, but supporting investment, so happy to be here.
Hi, everyone. Happy to be here. My name is Reginald Tumsime. I'm the group co-CEO of a company called Africoin, and the work we're doing is primarily to tokenize gold. But our long-term mission is to provide infrastructure that will enable every African country, every African commodity to get on-chain. So we're among the first batch of companies that made it to the Ghana Securities Exchange Commission sandbox in Ghana. We're HQ'd in Abu Dhabi, but our flagship market is Ghana. Happy to be here and look forward to sharing a lot more about what we're doing. Thank you.
Thank you.
Hi, everybody. Good afternoon. My name is Clara Arthur. I am Chief Executive Officer for Ghana Interbank Payments and Settlement System, GIPS. Prior to joining GIPS, I worked with EcoBank Group, worked with Fidelity Bank, worked with the UN, CDF, worked with the World Bank, and as of last year, I am CEO of GIPS. GIPS is wholly owned by the Bank of Ghana. My boss is here. So in other countries, you would have what I do sitting within the central bank. But for Ghana, 19 years ago, the central bank took a decision to set up Ghana Interbank Payments Systems. And what we do is enable and provide the rails that connect banks, fintechs, and mobile network operators. So currently on our network, we connect all the banks, we connect all the MNOs, we connect all the dedicated electronic money issuers What we do, which I'm happy to announce, is manage the platform that drives interoperability for Ghana, which affords every Ghanaian in this room to be able to send money across a bank account or a mobile money network. That is foundational when it comes to payments, and that's what we do in Ghana and do it very well. So it's a pleasure to be here.
Okay, my name is Robi Kwasari. I lead FinTech and Innovation for Central Bank of Ghana. If there's a pause with Claris platform, I have sleepless nights. And, payment interoperability is really key for the FinTech space, and the space is really growing. And if you listen to what the MC rightly said, it's actually becoming a major player. Just last year, 2025, the throughput that we experienced with mobile money is 3x of GDP for 2025. That should tell you that there's a lot that we expect to come. Prior to joining the central bank, which was last year, I used to lead digital solutions for EcoBank Group, working with 33 African countries. And I've had opportunity to see a lot going around in Africa. And I think what we are working together to move Ghana to the next frontier is an opportunity for investors to really pay attention to the country, because the value that you will get in coming to the country is quite rich. Thank you.
Thank you. Thank you. So my next question, I think for me, let's start with the regulators, because for me, I think the regulators have to set the foundation, right? For every single thing that we do. And my question will probably go to Philip, first of all, right? How does Ghana regulatory roadmap, right, include the VA SAP framework, create a safe, scalable environment for fintech companies in the UK?
All right, thank you very much for that question. All right, so we will start with the foundation of the economy. We've seen inflation at its lowest. Exchange rate has actually stabilized. And then we've seen Ghana's reserve also increase significantly. So I think the Minister of Finance even alluded to the fact that we might see a 15 months of import cover very soon. So that's a very good foundation for us to establish or dwell on. So regulatory clarity is building the needed consumer trust and growing the potential for scalable businesses to thrive. So back to your question, to put it simply, regulatory roadmap of Ghana is designed to address the issue of consumer protection, market integrity, and then market compliance, AML/CFT compliance at the core. This removes regulatory ambiguity and gives businesses competitive advantage in both Ghana and the broader African market, right? So currently, what we have done is there has been a Virtual Asset Service Providers Act. Okay. It was a bill that was enacted into an act in 2025. The approach was to use a risk-based approach. And currently, we've seen other jurisdictions. We've seen their missteps and we've seen their successes. Like the US, for example, they have actually had to put across two acts. One that clarifies the previous act. So looking at all this, we noticed that no, we need to take a step back and then go to the drawing board. We have a co-regulator called the SEC, which is by my side here. So we have to come together and have a collaborative directive, a joint directive, in order to build a very robust regulatory framework. Then we also have the BOG. BOG has actually established a dedicated virtual asset department, which I feel is very commendable because every other jurisdiction probably uses their regulatory bodies like the SEC to regulate the space, but we have a dedicated virtual asset service department to take care of licensing and supervision. We've also launched Sandbox. There are 6 entities in the Sandbox currently. This Sandbox entities, what we are doing is to test models, product models in this space, gather compliance data and the likes. We want responsible innovation and unregulated, not an unregulated innovation. So that's what we're looking at. Thank you.
Thank you. I've got additional panelists to join us as well. Mr. Dell from Web3 African Group, please come up to the stage. So can I also ask Mr. Owureko as well, obviously from the regulatory angle as well. In addition to what Mr. Philip has said, what are the things, what are the roadmaps, in addition to what he has said, that makes this a safe and scalable environment for UK firms to actually operate as well?
Thank you very much. I think for investors, I just want to assure you that regulatory certainty is the highest yield that you expect in the country. Because if you really need to come into the country to invest, and there's a lot of, as Philip Riley said, there's a lot of ambiguity around regulation, you will be self-doubting what is happening. But I think we've been able to establish real guardrails to be able to protect your investments, the consumers that you want to engage, and the landscape that you want to work within. I believe today, if you go back and you play the governor's inaugural video, everything that he promised is happening today. That should tell you the confidence that we brought into the country and for the investors as well. So I believe if you juxtapose where we were and where we want to get to, we have the right regulatory framework to be able to take us to the next frontier.
Okay, thank you. Thank you. Thank you for that. Thank you very much. So my next question obviously goes to Regina, right? What opportunity exists in Ghana for UK investors looking to get the virtual asset space? You know, I think this question is obviously focusing from the entrepreneurial side of things, right? We've heard about the regulators. They've already said to us that, you know, the framework are already there. So how do we play into this market?
Good question.
Concentration.
I think I keep telling people that this is going to be the most important opportunity for Africa. One of the key tailwinds we have as a continent, or broadly sub-Saharan Africa speaking, among many others, is our natural resources. So we have a great endowment of natural resources, such as minerals. And in the case of Ghana, we're very large, gold exporters. And so one of the opportunities we've pursued is to tokenize these commodities, starting with gold. So tokenization is one of the most important opportunities we have in Africa to unlock our wealth. The other key opportunity, and it came up in prior discussions, has to do with stablecoins. So one of the key headwinds, as we have in Africa, is our fragmented nature. So we have over 30 currencies, as an example, not to mention the bottlenecks we face moving from country to country. So the growth of dollar-backed stablecoins we've seen, such as USDC or Tether, it's a good thing, and it's answering to a very pertinent problem, which is the fragmented nature of our countries, and the hardship of doing business across different parts of the continent. And so a number of central bankers are worried about the dollarization of our local currencies because of the growth of stablecoins. And so the other interesting opportunity to explore in this space is local currency-backed stablecoins. So how can the CD be, digitized? How do we then get into things like tokenizing other currencies, such as the Kenya shilling in East Africa, where I come from, or the e-naira, and we've seen lots of examples. So I think as we scale, and our knowledge scales, and the right regulatory frameworks come across the different parts of Africa, that's one of the low-hanging fruits we have. I know that the Africa Free Continental Trade Area has done a number of things, such as, the PAPS initiative to try and, decrease these bottlenecks of moving money across borders. But I think that, stablecoins will be increasingly important to us as a continent. And lastly is the broad crypto play in the virtual asset space. One of the key other tailwinds we have in Africa is our young population. It's estimated that in the next, 2 decades will contribute about 25% to the global working population as sub-Saharan Africa. We will have more people of working age in Africa compared to China. And so the key question is, what are we going to do with these young people? What are they really interested in? They're interested in these such new emerging technologies. And how is that really important to the context of the development of the continent? And just to close with one key statistic, right now, sub-Saharan Africa contributes about 3% to global output and about 5% to global growth. Okay? So if we increase our productivity to levels similar to those of India in the next 2 decades, we'll contribute about 10% to global output and about 20% to global growth. So these numbers were cited from a report that was done by Bridgewater, one of the largest hedge funds, in last year's 2024's Economic Development Assembly in Cote d'Ivoire. So this is how important our young people are. And so if we don't focus on ways to improve or increase their productivity, we will have issues because we are left behind on the AI front, which brings me to the last opportunity around creating AI infrastructure on the continent. Because if we don't deeply invest in that as well, it will lead to, winner takes it all kind of, inequalities for us as a continent. So I would cite those as key opportunities that we see in Africa. Thank you.
Okay, thank you. Thank you very much for that. Also, another market player on my panel list as well is Mr. Dell. Same question to you. What opportunity exists in Ghana for UK investors looking to get the virtual asset space as well?
So I think, biasly, obviously the crypto exchange for me is an opportunity that I and other people have identified just purely because the numbers are there, right? Mm-hmm. Entities like, the big four, whether it's Binance, OKX, Kraken, Coinbase, mm-hmm. they're not coming into Africa, for fun and games. They have seen the numbers. Nigeria is the second largest, or third in some cases, depending on where the market is, largest place doing a lot of trades globally when it comes to cryptocurrency. But I think staying away from the exchanges is, I keep saying that the investment is in the infrastructure of virtual assets, right? When we say we are building the rails, we are not speaking about just cryptocurrency. It is the infrastructure that supports it. And in our case in Africa, there are so many different areas that needs that support. I keep stressing on the importance of having things on chain, not just tokenizing, but for example, our intellectual property, right? How we're going to have more control on our intellectual property. Also being in a situation where our governments, institutions are going to have a lot more insight by the data that they get, right? That's one of the key metrics that we need to be able to build an evolving, economy going forwards. And obviously, I have great admiration for what the central bank is doing. Ora, Phil, and obviously our governor and deputy have made this a reality. Because 3-4 years ago, the conversation we're having is very, very different. And so now you have a situation where an entrepreneur can actually come into the Ghanaian marketplace and look at multiple layers in the country and decide to say, okay, where can I basically maximize resources and value using virtual assets as a medium?
Yeah.
Great. Thank you. Thank you. So, thank you, Mr. Dell, for that explanation as well. My next question goes to Clara. For me, I think this particular question is very, very critical, right? Because if you don't build a proper ecosystem, you know what technology does. Everything falls apart. So, Clara, how can Ghana mobile money ecosystem be leveraged to expand into the digital lending, into tech, and cross-border payments across Africa?
Okay, thank you very much. Let me take you on a journey. Before Philip spoke and before Orekuso, I think investors like certainty. Investors like to know what sort of regulatory environment we operate in. Ghana's journey in the digital financial services didn't just start with the passage of the Virtual Assets Providers Bill, now an act. We started this journey in 2015, in fact, before 2015, when the central bank, after setting up GIFs, launched the branchless banking guideline. Branchless banking guideline was to afford banks to veer into sort of taking banking or financial services from big rooms like we are sitting in, huge floors where people, the whole idea about Africa then was financial inclusion was very low. So let's form some basis. We have built on from where we started from. In 2015, Ghana's financial inclusion was about 58%. Fast forward to now, I think the global index now, we are on 91%. Well, look, globally, financial inclusion is about 79%, but for Ghana, I think we have achieved that. This wasn't done overnight. This is because of a conscious effort by the central bank to ensure that we had a regulatory environment that would have us sit here today on this table and talk about Virtual Assets Providers Act. One of the other key things the Bank of Ghana did was the dedicated electronic money issuers. That is what brought the mobile money business that we are all talking about today. The growth of mobile money happened because the central bank saw it's a necessity to have that framework which gave non-banks, such as Momo from MTN, which you know, Telecel now, AT Money, Ghana Pay, which is actually the national payment wallet set up in conjunction between the Bank of Ghana, Ghana Association of Banks, and GIPS. This is foundational because this is what the central bank has done to give investors like yourself the confidence to come into Ghana and look at what we've built on our domestic payment rails. In 2016, when we moved on to include non-banks onto the instant payment rails, it was to look at a situation whereby banks had been doing it for a long time around instant payments. Instant payment is supposed to drive the economy because it affords you instant settlements, it affords you instant credit, it affords you instant debit. What this means is that it allows you to be able to innovate. It gives you data. In this room, I'm sure we all have relatives who are happy to talk about quick loan from MTN, who are happy to talk about what Jumo is doing, who are happy to talk about digital credit. The Bank of Ghana has passed a digital credit framework, which allows investors to come in, leverage what we have done in the domestic market space. If we hadn't done all of these from 2015, 2018, and finally to the passage of the Payment Systems and Settlement Act in 2019, this allowed non-banks to be within the licensing framework of the central bank, which today gives us banks and non-banks. A lot of you fintechs in this, but today when I walked in here, I was very happy because I have seen fintechs that are licensed in Ghana, and now we have the same fintechs that are licensed in the UK. And it gives me great joy because this is what regulation gives you, whereby we can export fintechs from Ghana to the UK. And it gives all of you confidence to know that you can come into Ghana and look at what we've done on the regulatory side to give you confidence. That is what investors like. If we don't build on all of these things, then we're not going to sit here to talk about stable coins. I'm happy to hear all the things we've done, but the foundational that the Bank of Ghana did, collaboratively with all the non-banks in this room, was to ensure that we've got a legal framework that would allow you to come in. So now, what has mobile money done? This mobile money that we are talking about in Ghana is as a result of all of these frameworks and the passage of all of these acts that has spurred the growth of mobile money in Ghana. Today, using your mobile money footprint, I can give you a loan product. Wow. Using your mobile money footprint, you can have an insurance product. Using your mobile money footprint, you can actually have agri-tech. We've got so many. I mean, I see them. We've got Complete Farmer. We've got all of these agri-tech companies that have come up. And this is because of the regulation that the central bank put in place. So for me, we can never talk about the advancements we've made in mobile financial services without looking at the impact that regulation has actually given us. And that is the reason why we are saying that when it comes to Ghana, we've got harmonized policies across all the regulators, if it's NPRA, if it's Securities and Exchange Commission, the Bank of Ghana, and the National Insurance Commission. What this means is that leveraging the mobile money data that you talk about, you can have products across. And for us, it's about financial health. We're no longer talking about access to finance. I think for Ghana, we have access to finance. We're no longer talking about use cases. Today, you can see all the use cases. What we are asking for is financial health, where we are asking that leveraging all these regulations that we have, investors can now come to Ghana because we've got payment rails that ensure that you can have payments. And even in the virtual market space, that is where we come in to give you the off-ramp. Because when you've done all of the stable coins, when you've done all the fiat money, when you've done all the digital currency, you would still need to have money. At the end of it all, you need to have fiat money, and that is the role national payment infrastructure like ourselves provide, whereby we can build on that rail and ensure that you all come on and then you layer on. So on the foundation, you've got banks, you've got mobile money operators, you've got virtual asset providers, and then we can take financial service to the doorstep of every Ghanaian and ensure that financial inclusion is available to every Ghanaian. And this gives comfort to all investors in this room who come in knowing that we've got a regulatory environment to spur on investment within the digital financial services in Ghana.
Fantastic. So, there we go. I think you've heard Claire said it all. The ecosystem is there. The digital assets are also there as well. So the chance for you to invest, the ecosystem is actually stable. My next question also, I'm not sure how we're doing for time, probably goes to Philip as well, probably the final one. How is Ghana positioning itself as a regional hub for compliant digital asset innovation in Africa space?
All right, so thank you for that question. So I think currently what we've done is to have the legislation where we have a legislation that has adopted international standards. So talking about the FATF Recommendation 15 and then also the Financial Stability Board's high-level recommendation. That creates some level of trust and then confidence in investors. We also have the supervisory. Bit of it where we have the sandbox where the entities, we have about 6, the first cohort, which is about 6 entities, where we are regulating and providing, we are gathering compliance data on, and also we are helping build testing product models with them. And we are looking at a space where, as at 2025, transaction volume was about $10 billion. That should tell you how active the market is, with about 3 million users. Wow. So we are looking at an economy that is growing, a space that is growing in the virtual asset space. Currently, we are developing directives and then guidelines for the virtual asset service providers. We are in joint collaboration with SEC. We have a standalone stablecoin, like my brother here said, because stablecoin itself is very is very necessary. And then what Dell also mentioned, the fact that we are building, the financial system is actually changing. It's becoming, blockchain is becoming the infrastructure that's underlying it's becoming the technology underlining the infrastructure. So we want to build, what we want to do is to regulate not regulate the technology, but regulate the activities of the technology, because it is business as usual, if you ask me.
Okay, thank you. Thank you. I know we've heard all these positive vibes and comments as well. But in 30 seconds, I would like to ask my panelists, right? Starting from you, Mr. Philip, what keeps you awake at night?
This question, I have to take time to answer because my boss is here. Anyway, I would say speed of adoption versus supervisory capacity. Supervisory capacity. We are here talking about, today we are talking about how to tokenize or how to classify certain coins, utility tokens, security tokens, and then we are debating with co-regulators as to how to regulate the space. But when the market has actually moved on, if you ask me, AI, currently what is happening in the market is there's AI agent economy. Ask me what that is. This is where crypto space is currently. They are employing or empowering AI tools or AI agents to own virtual accounts or to own wallets, where you can rent an AI agent and then say, complete a task for a fee. So you end up paying an AI agent, and then it does execute the transaction, takes the funds, and then you go to sleep, you go to bed, but that AI agent is still 24/7 online. So here's the fun part. Imagine another AI agent talking to another AI agent. The two together are going to determine your future. Yeah, so that's what keeps me up at night.
Thank you.
Yeah.
I think for me, the biggest stuff for us as Africans, I'm originally from Nigeria, I think for us to have framework that allow for license passporting, and so I hold an FCA license here in the UK. Why can't I operate on the back of that license through the rigor that I have gone through to hold this license, to do business in Nigeria, to do in Ghana, to do in Kenya? And so that is super critical. We've seen what licenses can do.
Okay.
Not to take much of our time when the guys from Binance flew to Nigeria wanting to solve the crypto stuff, we saw that they were kept for a long period of time. But we're grateful to Ghana almost making that environment available for businesses to almost latch onto that, so there is clarity. So what will keep me awake at night as the CEO of CSLP, it's for us to be able to have that passporting of our license that you have in this country, very rigorous. Then you can almost go into much of our other markets to do those stuff. Thanks.
Absolutely. I'm sure you have the regulators listening to you as well, so probably take note. Mr.
Yeah, I think for me, it's marketing Africa as an asset class. Very difficult work, but very committed to doing so. We imagine a world where capital from the global north or anywhere in the world that is seeking a place should look at Africa as one single marketplace, right? So marketing it as one asset class. And just listening to the CEO of the Ghana Stock Exchange earlier, she mentioned that one of the things that were a bit surprising was the amount of money that was leaving Ghana into crypto, as an example. But herein lies the opportunity. How can we tokenize the Ghana Stock Exchange? In a few years, we'll have trillions and trillions of value in the tokenized space. And I think that's the single most important opportunity for us as Africans to leverage emerging technologies such as blockchain to market Africa as a single marketplace or a single asset class. So that's what keeps us awake at night. And we're very excited to be part of Ghana. I think Ghana, in my experience, has been one of the most profound markets we've ever been to. I can tell you for sure. Very talented people, very forthcoming regulators, very smart frameworks on the regulatory side of things. And so, and I recall in our first meeting with regulators, thanks to our ED, our country ED in Ghana, Mr. Kojo Hastings, we met a number of regulators, and one of the things that I kept saying is, why aren't you guys thinking about an international financial center that is virtual assets cleaning? You have incredible young people, very smart. You have the right regulators in the Bank of Ghana, in the Securities Exchange Commission. What can we do on the West Africa block to market Accra? You've told a story about resilience, from how you came out of a ditch, for lack of a better word, to now a place where you're being looked at as a case study for economic recovery on the continent. So how can you leverage all these key insights, tools, good news, to position yourselves as a VA-leaning international financial center? So I have no doubt that Ghana will be a fantastic market for entrepreneurs like ourselves. Yeah.
Thank you. Thank you. Thank you. 30 seconds. I think we're also running out of time as well.
We are getting there.
Okay.
But just to let you know, in terms of passporting, we have started on continent. We have. In Ghana and Rwanda has a fintech passporting, and even Rwanda and Kenya. So I think what we need to do is that let's get those going, and then once we have that blue, I call it playbook, we can actually ensure that we have it with Nigeria. We in Ghana are talking to Nigeria, and for us it's important. But what keeps me at night, in 2020, GIBS processed, we crossed over 1 billion transactions, interoperable transactions. What that means is that transactions that are across either bank accounts or mobile money wallets. What keeps me at night? My target is to process 4 billion transactions in the next 3 years. So that keeps me awake. How to ensure that I've got the infrastructure that would support this growth, and that's what keeps me awake, and that's what my team and I here are working towards. So that's what keeps me awake.
Thank you.
Okay, for me, I think to ensure that trust is not broken.
Right.
Digital financial services anchors on trust. Right. I quite remember 2007 when we started mobile money. Customers would deposit funds in their wallets at the agent A and go to agent B to take it out. And if we don't protect that trust, i.e. cyber attack, i.e. fraud coming into the ecosystem, all the successes that we've recorded, where I'm talking about 3x of the throughput coming through mobile financial services, is our GDP. We can actually be impacted. So I think what keeps me at night is to ensure that trust is not broken. Thank you.
Thank you. And finally, Mr. Dell.
Well, coincidentally, today is my birthday.
Congratulations.
So I'm going to use this opportunity to maximize my request. The first request will go to Governor. I see he's looking on his phone. But no, basically, with the central bank, I guess it's a balancing act. We've been working with them collaboratively. And so how ironic that on my birthday, I'm actually sitting here on a panel with my two favorite regulators, including the governor and the fellow entrepreneurs, which is an honor, to be honest. But what keeps me up at night is the cadence between regulator and entrepreneurs.
Right.
So regulators in Ghana have done a great job in making sure that there are guardrails, right? And I would say that the framework has attracted a lot of visibility and a lot of entrepreneurs coming. But at the same time, naturally, as entrepreneurs, we're quite impatient, right? We want to innovate, we want to move quickly, we want to build things. And so I believe that there is a moment that Ghana, I keep saying it, we need to seize. And why we are seizing it is because we are in a position where people look towards the country and the regulation and the entrepreneurs to really help to innovate this particular industry. It's not the numbers. It's not just the numbers. It's about what this means in hindsight for Africa, right? We are literally contributing towards history, but it will be really valued in time, right? When you think of what the central bank have done pertaining to rolling out a virtual asset policy. So what really keeps me up, as I said, is the cadence between innovation and regulation so that they're going at a speed that would allow us to basically be at the forefront of this industry.
Thank you. Thank you. Thank you very much. A round of applause for my panelists. I think it's been an insightful conversation, the fintech, digital asset, and innovation. Thank you.
Take a picture.
Every great Ghanaian business begins with a moment of courage, a moment of belief, a moment when someone says, "Let's begin." For over 70 years, GCB Bank has stood with the people who build Ghana, the entrepreneurs who start with an idea and turn it into opportunity, the industries that keep our nation moving, and the businesses that create jobs, empower communities, and drive our economy forward. Supporting Ghanaian enterprise has never been an initiative. It has been our identity.
In healthcare, consistency saves lives. To manufacture and distribute medicines across Ghana, we need reliability in our supply chain, in our operations, and in our financial partners. GCB has been this pillar of reliability for us. The support from GCB has enabled us to expand our facilities. We are now within reach to every Ghanaian. GCB believed in our mission to make quality healthcare accessible for all. And that partnership has strengthened us every step of the way.
Ernest Chemist continues to shape Ghana's healthcare landscape, and GCB remains proud to stand behind a company improving lives nationwide.
There were times the road felt long, times expansion seemed impossible, times we needed someone to trust our vision even before it took shape. GCB Bank didn't just finance us, they believed in us. The support from GCB gave us the courage to grow from a handful of stations to becoming the leading name in the downstream oil value chain. Today, we are proud of our progress, and with GCB as our partner, we are even more poised and motivated to do more as we pursue our goal to become the most integrated oil company in Ghana and explore opportunities even beyond Ghana.
Today, Star Oil stands as one of Ghana's leading oil marketing companies, a testament to resilience, innovation, and the power of the right partnership.
At FEDCO, our work is rooted in the communities that sustain Ghana's cocoa story. To serve these farmers well, we need a partner who understands timing, trust, and integrity. GCB has been that partner. Their timely support ensures that farmers get paid. Their system ensures the work never stops. They don't just support our company, they support the livelihoods of thousands of families.
From seed to export, cocoa remains a pillar of our economy, and GCB continues to stand behind the companies that drive this national treasure.
I consider our relationship as a partnership. Been with them since 2017, and it's been good. My business size has moved from $150 million to about $1 billion. GCB has been very instrumental in that process, providing us with LC lines, overdraft lines, helping us with our transfers to our suppliers, transfers to other banks as well. Linus and his team, very efficient. Yes, you have hitches here and there, but they always come through with ensuring that the job is done at the end of the day. So we appreciate the support to our business. We thank GCB for the continuous partnership with Jewel Energy, and we hope that that partnership continues to grow for the foreseeable future. Yes, GCB is a bank for life.
Jewel Energy's story reflects a new era of Ghanaian enterprise, bold, modern, and future-focused.
In our line of business, you need strength. Strength in your machinery, strength in your people, and equally important, strength in your partners. And GCB has been a strong partner to our progress. Growth requires heavy investment, and not every bank understands the risk or the skill. But GCB understood us, they backed our expansion, supported our equipment financing, and stood with us as we took on bigger projects across the country. Their belief gave us the foundation to grow stronger, to do more, and to contribute meaningfully to Ghana's infrastructure story.
GCB is proud of our working partnerships with Twin Rock, we are proud that we support a company that is at the core of Ghana's physical development. We are proud that we are part of the story of Ghana's builders, innovators, risk takers, and community lifters. GCB has been at the heart of growth across infrastructure, mining, agric, manufacturing, energy, materials supply, healthcare, and construction value chains. Together, we move Ghana forward. Together, we grow. GCB, your bank for life.
Thank you, thank you, thank you, thank you, thank you. First of all, there's a man that proves that Ghanaians aren't short, and his name is Del. And Del is head over heels because it's his birthday today, so I think it's only right that we sing him happy birthday. So 1, 2, 3. Happy birthday to... Come on! Happy... One more time! More life, more vim, more success, more wealth. More, more investment, 100%, obviously of the crypto kind. That's what he wants, that's what he wants. Okay, so who is here for the critical minerals panel? People have been saying, Michael, when is the panel? The panel is now. So please stay with me, stay with me. As I said, we've got a critical minerals panel. How to invest in mining, the challenges while building local processing facilities on Ghanaian soil. To lead this conversation, we've got, I have to say, a personal friend because I've known him for a very long time. He's a senior partner and co-founder of AB and David Africa, a leading Pan-African business law firm, one of Ghana's foremost corporate and commercial lawyers. Please have attention in the room. Shh. You can WhatsApp each other in silence. It's okay. Just communicate through texting. It's okay. He's an advisor to governments, multinational corporations, and a strong advocate for Africa-focused economic growth. Please welcome to the stage, David, Dr. David Okusudoti. Please also welcome to the stage, we have CEO of Minerals Commission Ghana, Isaac A. Tando. Please welcome to the stage. And please welcome to the stage, Michael Akafia, Vice President of External Affairs, Goldfields, and President of the Ghana Chamber of Mines. Please welcome to the stage, Michael, my namesake. Microphones are on the chairs. Have a fruitful conversation. Thank you. Best of luck.
Thank you. Thank you. This is what they call the graveyard shift. Yeah, but we will make the best of it. Very often you hear people when they give speeches during Africa investment conferences and things like this, and they will talk about Africa has got X percentage of mineral deposits of the world, etc., etc. But many of the countries are still poor. And at times it sounds like an oxymoron. How can you be resource rich but poor? But that's the reality. So this session, which is supposed to be part of the critical minerals session, is dealing with something beyond the critical minerals, which is unlocking Ghana's mineral wealth for sustainable growth and resource sovereignty. The last part we will deal with. But I have a two-member panel here, and I'll ask them to introduce themselves, and we will get going over the next 30 minutes. First, to my immediate left, Isaac.
Yes, my name is Isaac Tando, CEO for Minerals Commission. Minerals Commission is responsible for the resource management of the nation. We technically advise the minister on the way forward. We are responsible for the Mother Earth Act 703 and also the 9 regulations in which the mining companies or the mining fraternity deals with. Thank you.
Yeah, Michael.
Thank you. My name is Michael Ademakafia. I represent Goldfields. I'm the Investemnt.
Microphone, yeah.
Hello? Okay, it's better. So I represent Goldfields. Goldfields, our purpose is enduring value beyond mining, and I represent also the Ghana Chamber of Mines, which is the main industry association for mining in Ghana. Thank you.
Since you are wearing 2 caps, let me start with you, Michael. You've been Goldfields have been in the business of gold in Ghana for a very long while. What has changed over the period, and what makes Ghana's sector more competitive as compared to others? What will you say if somebody asks you a simple question who wants to invest in Ghana's mineral sector?
Yeah, I think maybe just to take you through a bit of the journey and why we are where we are. I mean, the key thing to point out is that Ghana is not the leading gold producer in Africa by accident. It was by virtue of legislation and also introduction of policies which attracted investments into the sector. Because if you take your mind back, before 1986, the total production for Ghana had slumped. In fact, 1983, the entirety of the country produced 213,000 ounces, which today is what a medium-sized mining company in Ghana will produce. And so the 1985 reforms, the PNC Law 153, introduced a bundle of incentives to attract the likes of Goldfields, Newmont, and Anglo Gold into the sector, who then brought badly and urgently needed capital to sort of rejuvenate the industry. So I think it's important to bear that in mind in terms of, especially because we are on an investment platform, to appreciate how we got where we got to. Now, if you look at it and track it from the Goldfields perspective, given the question that you asked, what is now Goldfields Takwa Mine used to be the state gold mine in Takwa Mine. At the time, because the state's lack of capacity to invest in growing the resource, the production slumped to around, in 1982, around 24,000 ounces. Now this has, through Goldfields investments, increased several folds. Today we do about an average of 500,000 ounces from that era of the 24,000 ounces. And so one of the things that you see would have changed is also the introduction of, over time, local content. And the reason why that is important touches on the point you made earlier. How do we unlock the value to ensure that the resource benefits the people, so that we can maximize the benefits such that people can see the transformation that they need to see in the economic life. So local content was one of the things that happened in terms of legislation. But you would find that responsible, sustainable miners, especially those in the Ghana Chamber of Mines, well ahead of the introduction of local content, saw the need to do value retention. And so to give you a few practical examples will suffice in terms of how that has practically happened. Before it became a requirement of local content that we should contract fuel companies, Ghanaian-owned fuel companies, a mining company, Goldfields, contracted Zen Petroleum, which was mentioned in some of the earlier presentations as one which has grown to the point where it has listed on the Ghana Stock Exchange. It developed to the point where not only is it investing in Ghana, because it has contract with not just Goldfields. On the back of the Goldfields contract, it got a Newmont contract and subsequently became a multinational investing in Mali and countries like that. That's one example. A power company, another one who will suffice, will be a power company called Genza, which over time, because on the back of the Goldfields contract, has been able to not just turn its story around, but also build a 300 megawatt power plant in Côte d'Ivoire just next door, but also interestingly built a gas processing plant in Ghana. And also built a pipeline from our Etoabo gas processing enclave to Kumasi. That's a private sector entity. And so we believe that what must change in terms of how we ensure that the minerals benefit the people is to unlock the value along the entire value chain, so that we can deepen investments across the entire value chain.
Okay, I'm coming to you, Isaac, but just to let the audience know, I will be taking questions from the audience right after he speaks. So get your questions ready. I want you to get involved right from the start. Now, coming to you, and it's a double-edged question. First, picking from where Michael left off regarding what has changed to make us more competitive. Key coming from the private sector is essentially confirming we become more competitive. So you as a regulator, I'm sure you will affirm that. What can you add to that? And the other part of the question is, Ghana is known for gold. In terms of critical minerals, what are the critical minerals we have, and what is the status of policy regulation in that investors should be looking at?
Yeah, thank you, David. So what I would want to add is the solid regulatory framework that we have in the country and a stable political environment. That adds up. If you want to take your money somewhere, you want to take your money where there is stability and there is rule of law. That is where you would want to take your money. So these are the things that are adding to more multinational companies that are coming into the country. Now, talking about the critical mineral, it's been a known fact that Ghana is not only endowed with gold. We've got gold, we've got bauxite, we've got manganese, we've got diamond, we've got graphite, tantalum, columbite, we've got nickel, and recently the discovery of the iron ore. So all these critical minerals are available in our country. And with the new green energy transition, I mean, it's about time that as a country, we revive this to the full beneficiation of the people of Ghana.
But what will you say that the Minerals Commission or the regulator is doing to boost investor confidence? And when I say investor, I'm not necessarily referring to investors from outside, including local investors as well, to boost their confidence to invest in the sector. And don't let's sweep anything under the carpet. After political changes every time, contracts are terminated, etc., there is a general feeling that there is stability politically, but at times lack of continuity business-wise. Is that still the case? What has changed? How do you make them confident?
So talking about that, I'm not sure that applies to our industry.
Okay.
Because we've had contracts that have panned, like the Zane thing he spoke about has gone through a couple of changes of government, and it still went on to grow. So when we talk about that, I don't think it's really, I think there is more stability in that sector than any other sector in Ghana. The other one we are doing as a regulator is reforming our laws to be investor friendly. For instance, issues of ratification was a big deal in Ghana. Now the new law is forcing the minister to get any lease that has been granted ratified within 60 days. We are reforming the licensing regime. We are digitalizing everything from A to Z, removing human interference. So you can, be anywhere in the world and apply for your license, and at any point in time, you can go online and see the progress. All this we are doing to try and ensure. And on the side of the communities, we've introduced what we call the Community Development Agreement as part of the lease for the mining companies. So by the time your lease is up, whatever you agree with the community, we will take the boxes to ensure that whether we have to give you lease or not.
Any hand up already with a question in the mining sector? Okay, so he should be getting the microphone, but before he comes in, so I wanted to identify a questioner from the audience, but I'm going back to Michael, so you take the next question before. We cannot talk about the mineral sector without talking about Galamsey. Yes, and I like to address the elephant in the room. So to what extent will you say that it is a menace that threatens investors in the mining sector? And what do you view from a private sector perspective as the antidote to ensure that investors still come to the sector, notwithstanding that general view?
Thank you very much. But David, with your permission, I just sort of want to touch a bit on the point.
And then you come to my question.
I'll come to your question soon thereafter. It's true that we've been working in partnership with government as part of government's effort to, as they call it, overhaul the law. There's been a lot of consultations that we must admit. There were concerns that the industry had, and it had to do with security of tenure and so on. And thankfully, through those engagements, there's been some shift. We are hoping that there will be further engagements, especially as a bill has now been laid, the amendment bill that he talked to has been laid before Parliament. We'll engage the Parliamentary Select Committee, but there was some anxiety around security of tenure. And thankfully, with the likes of Goldfields, President Newmont, and other members of the chamber, we believe that in direct collaboration with the public sector, with the minister and our sector ministry, we can improve.
I don't intend to interject, but for
we
some
can
people,
improve the environment.
Some people, no, you will still continue, but I need to chip in this. For some people, there's a difference between security of tenure and issue of renewal. Are they the same?
Good question, and a very, very important question. I think
because of where you come from.
Thankfully, I know you're a lawyer because I'm a lawyer. We know that the law is designed to ensure security of tenure, even as regards renewal. Because if you look at the provisions of the law, 44.3,
It says when the mineral rights holder has met the material conditions of his mineral rights, then the minister shall. Unlike the usual renewals in other provisions. So it is, and it's there by design. It's not by accident. There are other provisions in the law that is supposed to signal to investors. Because if you think about it, if you didn't assure security of tenure at the point of renewal, mining companies usually must do what we call the mineral rights area, like investment exploration. You must be doing that to extend the life. You must be exploring as the same time that you're mining to extend the life. If you're not assured of that security of tenure, that investment is not likely to happen.
Okay.
The other point related to that, mining is capital intensive, risky, and long-term in nature, and is very well known. If you benchmark and compare us to other jurisdictions, you will see that mature mining jurisdictions such as ours have similar provisions in terms of that renewal. And the thing about it is that sometimes you find that the resource is at an not near any urban center or near infrastructure or access to anything. Mineral rights holders must undertake huge capital outlays. It takes like between 15 to 20 years to develop a project from, say, greenfield to brownfield. Look at that amount of time. If, for instance, you invested in a power plant to make that place viable, the mineral resource viable, what you must be assured of is that capital that you've deployed, once you've done work to extend the life of the mine, if you apply, you'll get the extension that you need. Now, back to your question about ASC.
Yeah, and make it short so
I'll keep it short.
Yeah.
It's absolutely critical for us because we believe that it has existential implications for our industry. And that is why the industry, the Ghana Chamber of Mines leading that, has embarked on a process to engage government. Government has this project by which it's introducing cooperative mining. And through that, they've made requests to mining companies to relinquish land. What we've said to ourselves is that we will not relinquish lands for the formalization, because formalization has been said to be one of the most potent ways, World Gold Council, of resolving galamsey, like you said. So we are working collaboratively with government to ensure that we don't only cede land for its own sake, but that we put in place mechanisms working in collaboration with partners like the World Gold Council, where we can use, say, for instance, a processing plant, a model processing plant, to be the center of attraction to get those who would otherwise engage in illegal mining to submit to regulation. And we'll provide incentives, including a one-stop shop process for permitting, so that they would have that incentive to move away from the river bodies, to have that incentive to move away from the protected forest reserves, to come to those model processing centers, so that becomes a fulcrum around which we can formalize. That process is underway. The other part of it, and you pointed to the fact that is a threat to investment. Some of our members, now speaking where my Chamber of Mines feel that they are threatened. There's a particular member who has a particular mineral rights, and the place has been invaded by galamseyers, and yet it pays the fees, the requisite fees in relation to that area. Thankfully, we signed an MOU with the Ghana Armed Forces and with the cooperation of the late defense minister. And so there's been some deployment of some security personnel to sort of protect some of these things. We believe that some of those measures can help sort of address this issue. But I think one key point to point out, though, is one of the things we're doing is learning from other countries. What is interesting for us is that when you look at Latin America, Peru has a galamsey problem or illegal mining problem, but just next door in Chile, they don't. And the reason is simple. It has to do with the ability to trace. We are happy that government itself, through the Gold Board, is trying to put in place a trace.
Okay.
Well, part of the things are tied to it is that it's not just a tracing mechanism, but it's a whole system, such that in a place like Chile, if you're ever to engage in illegal mining, you find that the financial system will shut out to you. Okay. There's no way you can really transact. And that will be one of the ways in which we can sort of address that challenge. Thank you.
Thank you. Question from the audience. Yes, you have the microphone. Just go ahead.
Hi, my name is Jeremy Rogers. I'm a co-CEO and co-founder of a company called Pharmadyne. But actually, I want to sort of focus very specifically on the logistics.
On the what?
Logistics.
Okay. And who is your question to? Please keep it short.
Actually, it's for all three of you. I'm wondering if you could, if you could help me out for a moment. Just humor me. If you can imagine, obviously, the idea is for extraction. I came up with a project whereby we would be able to use those same logistics corridors instead of just for purely extraction, but also for providing pharmaceutical product and any emergency equipment to come in through the same logistical corridors. But the trouble that I'm facing with some countries is convincing the mining companies to get on board, because they also need the government to be on board as well. However, this will drop costs, and this would actually lower your insurance premiums for the mining companies. Do you think that this would be a problem for a country like Ghana to be on board with this project?
Okay, that sounds more like a question that relates to advertising a specific company. But I can tell you for a fact that Ghana is trying to become not just an investment hub, but a logistics hub as well. I've seen Guzitando here from the 24-hour Secretariat. I'm aware about using the voter corridor as part of the logistics corridor. I think they are working with GIF and the rest in that. And I'm aware of some mining chains, value chains, which are likely to be along the corridor. So yes, definitely that's a kind of project that, if well done, Ghana should be interested in. But let me go to Isaac, because that question actually relates to the question I was going to ask you. And if there's any other question out there, get ready. Now, there are some large deposits of minerals where there is really no infrastructure to access it. And let me give you an example. In Hini, as an example, you have the bauxite somewhere 78 kilometers from the nearest rail line. To what extent is the regulator working with government and other allied agencies to ensure that you get infrastructure to these places in order to be able to, as it were, grow that mineral wealth instead of leaving it as it? The opportunity is one thing, but being able to access and leverage is another, and create a whole logistics corridor, as he's talking about.
Sure, thanks. And Dave, that is exactly what I think the current government is doing. If you look at the sector for Dr. Tano, the 24-hour economy, the commission is working with the Ghana Railway Development Authority. We're working with Gold Board to try and work through some of this infrastructure. You know, the president has given us a deadline that by 2030 we shouldn't export anything raw. And we are tying in all these things to make sure that we have access to this places.
Again, just to interject, I'm aware about the present deadline. It would be helpful if you mention along that exactly where we are on that, because if you look at the law for GIADEC, and I had the privilege of writing that law, so I know what I'm talking about. The deadline was 2023, which we did not implement, and the current president has now given us a deadline. That was the previous government. What exactly is being done to ensure that this?
So first of all, we have moved ahead to sign off leases to GIADEC, which they didn't have, because you need to get the lease to enable you access funding. They have signed a couple of MOUs with multinational companies, and we are working through to make sure that bauxite from Awaso is connected to Vaco in Tema, which we are busily working. So it's not one-sided, it's about 4 legs, and all the legs are being tackled at the same time. So it's not like GIADEC is there for many, many years and nothing has happened. For now, they've got 4 leases that is going to Parliament for ratification. This gives them the power to access any financing in the world for any infrastructure development that we need to do.
I was wondering whether the very idea about GIADEC as an example, and as well as GISDEC, with where the iron ore is deposited in the Akwafu Hills and OT region, creates an opportunity relating to mining, but not necessarily the mining, of infrastructure in PPP. That's really my question. So that somebody else is doing the power plant like Gensa, somebody is doing the rail line, but this requires not necessarily GIADEC, but the likes of GIF, so that the other investors in this room, that's the kind of...
Yes, so that is exactly what is happening. If you take the lithium, for example, I mean, MAFE invested some $5 million in there. They've got another 27 million equity that they can still, and we've still got option to even increase our stake. We are working with B5 Plus, the producers of the steel ball, on the Jomere iron ore drilling. Well, in fact, we are very close in closing that deal. And we've got a couple of options. There is another company that is doing analysis on the Volta Lake to see whether we can use a barge to bring this material to Temaport. We are also assessing the railway line, and we are also working on alternative route as well. So it's not in isolation. They are all boxed together with different segments being handled by different investment
I'm happy
portfolios.
you are mentioning it because I want other people to know that the investment may not necessarily just be in the ore. Yes, there's another hand up. Can you send the microphone?
Yes, David, if you don't mind me adding, just to the point he was making.
Keep it very snap. I've called the other questioner.
Very well.
Yeah.
Just to point out that the Ghana Chamber of Mines commissioned a mining hub study, and we commissioned an entity to do that, and they conducted that. It was meant to look at the entire value chain and look at things from the project perspective, where you're looking at things from end to end. And that's where some of your points about EPP infrastructure comes in. There's one other point related to the National Supply Development Project. And with that, our aim is to retain more value along the value chain. So we're looking at products that feed the mining industry. So for instance, there are things we're calling low-hanging fruits that we're working on unlocking, so that it doesn't become, and that's how we believe the transformation that we need to see in the industry.
Michael, I will take that question, but among other things, it's meant to give you a couple of minutes of breath, because I'm told that multinationals like you don't like paying local content persons, and you rather bring your suppliers from outside. But catch your breath on that. Where is the question?
It's right here.
Yes,
Hi.
please go ahead.
I'm Kojo Jemfi. I'm founder of MMC, a mining mineral service provision company. Now, my question is, what's the Commission doing to help Ghanaian investors identify and access investment-ready mineral resources? Now, the reason I ask that is we're working on putting together a caustic soda production plan. We're on the proposal. Now, in the due diligence we realized that the salt deposits, the areas that we are aware of, are heavily in litigations and all sorts of issues, and it's been difficult to access a place to plant this production plant. Have you got any resources ready that we can tap into and take advantage of?
Okay.
Sure. Thank you.
Over to you.
I mean, when I was speaking earlier, I started with the reforms of the licensing regime, because we are aware of this particular issue. And a lot of these issues are being resolved to make sure that the investor who has put his money into a particular concession gets access to the concession. And the law is clear that when there is a mineral in there, we would have to exploit that mineral for the benefit of the people. So that is why when it comes to those projects, the government can step in to say, this project would happen. We would support the investor to ensure that the project happen. In fact, I have personally, together with the minister, have been to a lot of places that had litigation, and we got those issues resolved. Because the mineral is of national interest. It's the nation first before anybody who claims the access to it. The other things we've done, and to top up with what Michael is trying, we are working very closely with the chamber. We recently launched the grinding media standards, and we've done a lot of experiments for activated carbons. We are working very, very, very closely to ensure that at least the local investor has some opportunities. I have recently invited most of the banks in Ghana to talk about funding for some of these projects.
I think his question, even though you're answering it, I think we are not going to the core of it. And let me illustrate as an example. I can guess where he's coming from. Yes, if we talk about bauxite, just bauxite alone, there's a linkage to bauxite as part of fertilizer production. It's linkage to salt to be able to produce caustic soda, chlorine, and even shrimps. The question he's asking, if I understand him well, is that if I identified a particular bankable project, viable, investable project, which is at the end of the chain, how can I come to Minerals Commission and know that we are doing this, we've gotten to this stage, and we want you to start producing caustic soda because the industry will need it? It's not just the land issue.
Okay.
It's about other opportunities. We create the multiplier effect.
Yeah, great. So, for instance, if you take the lithium.
I hope I got you.
If you take the lithium, there is a component the ceramic companies need to continue with their production. And yes, even though it's a byproduct of the licensee, it's also an important product to the nation. So if you look at some of the mines that have waste and they are burying them, no, we are turning back to make sure, turn them into quarries to build our roads, to build our railways, to build our civil engineering infrastructure. So it's something that we are looking at the total value. We wouldn't allow it just because you are the leaseholder. If there is something that is of interest to the nation, we are asking the large-scale companies to tell us what has been happening to the silver components and all that byproduct that they've been shipping away. For many, many years, we've asked them to account for it. So these are the things we are looking at. Now, it's no longer the interest of just the licensee. It's whatever is available in there that has some implication, some good implication or some development implication to the nation. We are interested in that as well.
Thank you, Michael. I'll come to you. Remember, you had a hangover question, which is whether you are bringing your suppliers from outside and ignoring local suppliers. We are talking about sustainability. So, but added to that question, let me just add one. You are in gold. Are you looking at the other kind of minerals, especially critical minerals in Ghana, I mean, in the long term? So let's put the two together.
Okay, thank you very much. But then just to touch on the silver that he mentioned, thankfully, there's a national assay program that he knows and is aware of.
I hope you've not been shipping some of the silver away.
No, that's what I'm saying. There's no question whatsoever. There's almost like a triple check process, such that the accountability issue is not even an issue.
Okay, the governor is here, so you have to be careful.
Because he knows that we have a customs rep in our gold room. Not only that, we have a gold board rep in our gold room. It used to be PMC under the National Assay Program. In fact, for the mining companies, typically for us, our interest is not so much in what happens after the gold room, because you would find that the offtake arrangements that we have with our miners is such that property risk and title, property risk and title in the gold transfers to the off-taker when the gold leaves the gold room. And so there's even a third-party independent, say, usually it's SGS. They have an assay lab in situ near where our mine sites are, who do actual additional verification, so that such that there's reconciliation possible, so that there's no issue of possible loss of minerals. So in terms of diversification and looking at other minerals, obviously, from the chamber perspective, that's one of the things that we seek to do, because we seek to represent all miners. And so Ghana Manganese is our member, Ghana Manganese and Ghana Bauxite is our member.
No, my question was to you as Goldfields.
Particular.
Yes.
Well, so
or you cannot answer for the chief executive.
Typically, mining companies like to be specialists in what they know.
But you have assets all over the world. Are your assets only gold?
You're right. We have assets in
Australia.
10, essentially 9 assets in the project, right? And so Chile and all over the world. Typically, because we say we're a gold mining company, and that's what Goldfields has been doing for more than 100 years, that's one thing that we know too well. You don't want to branch off into areas, even though at the broad strategic level, there's consideration for diversification if need be. But copper, because Chile is such a copper company and we have an asset in copper, it's one of those that has come up. So obviously, those are one of the things that we've been looking at. Now, in terms of your question, I think it's a very important question to address in terms of the perception out there. Yeah. I mean, it's not true, and when it comes to large-scale mining companies, that we look to bring, or at least as of today, and it's important because most of us are listed companies and we subscribe to what's called the Dow Jones Sustainability Index. And that's particularly important because these days investors are themselves looking to make sure that you are truly compliant, because if you are not compliant, then you have a risk and their investments will be at risk, you see. And so to that extent, once we sign up to those ESG commitments, it requires for us to put in the best compliance measures in place. Now, beyond the compliance measures, there's an issue when it comes to local content. There's an issue of ESG commitments which require us to retain value in country. And so what is happening these days is the mining companies, not only are we tracking value retention, we are tracking what we call host community procurement, such that what we say is that it's not even enough to do in-country procurement. What you want to do is to impact the communities, because that's where you need transformation to happen, because that's if like you must live in harmony with your host communities, because we say that our social license is our most important license. It's more important to us than our EPA and Minerals Commission licenses, because you must live in harmony with your community. And so because of that, we track host community procurement and are trying to improve that over time on a quarterly basis. And we want to do it in a meaningful and impactful way rather than just nominally increasing the spend in local countries. One of the ways in which we are trying to close a loop in that regard is that we have corporate social responsibility vehicles like our foundations and so on. And one of its objects is enterprise development. We want to tie that back into that value creation that we are talking about and value retention that we are talking about, so that that's how come we can, even speaking as Goldfields now, can tout our credentials in when it comes to local content, because before things became a requirement in the law, we were fully compliant. Before it became a requirement to award contracts to contract mining, Ghanaian-owned contract mining company.
Okay.
Goldfields had done that, on two of our mine sites. And we did it for power, we did it for fuel. And so if these are the big ticket things and we've done that, you can be sure that we've done it for the
I've been told to wrap up. There's one important question, and if you can keep it in 30 seconds for me. Do you think Mincom and GOG should be spending, and this question is to you, should be spending some amount of money to do JOC certification, if possible, to verify the minerals we have under the earth, even before investors come in? Because do we really know what we have?
Yes, as a country,
it's a tough question, right?
No, as a country, the truth is we should have gone ahead to do some of these things, and that would have given us power for better negotiation. That wasn't done for many, many years ago, but we've started from somewhere.
In the research, you should be doing
in the research, we've started. For instance, Mincom together with the Gold Board have contracted geological survey in drilling some of the areas for the small scale and the cooperative scheme. And then the seeding off on some of the large scale concession. In fact, some have been generous to drill them before they give them to us. Asonko is one, AGA is one of them. I think Goldfields gave us an area they are yet to drill. So yes, as a country, in order for us to have a proper bargaining power, we should have drilled the whole country and making sure that we know what is there. That would have helped out to negotiate better. But we've started doing something.
Thank you very much. This actually reminds me of a short story I have to tell you before I go. This is the case of a speaker who was the last speaker at a session like this. And by the time he finished speaking, only one person was left in the room. And he decided to thank the person graciously for being such a gentleman and waited for him. And he said, actually, I brought the sound equipment and I was waiting to take it away. I am very grateful that you've waited up to the end of this session, and I want you to put your hands together for my panelists. Thank you very much.
Thank you so much. Thank you so much. Dr. Afosu Dorte is one of my favorite moderators because he will not let you get away from the question. He will say, we have not got the full answer. Let's dig deeper. True lawyer, true lawyer, true lawyer. You can take a picture here if you would like to, yeah? It's fine. I will talk while you're on stage. Not a problem. So, tomorrow, myth is going to be busted. The president will be here tomorrow. So I hope to see you here bright and early. I would like to say a big, big thank you to the governor of the Bank of Ghana. Thank you so much for still being here at the end of today. And also the presidential advisor to the 24-hour economy, Dr. Guzi as well. Tanu, please, thank you so much for being here. I know this is a long day. Thank you so much. Listen, there is still so much to do today, of course, networking, but please do go to the exhibition centers. The reason why that's important is because you start to see those are the companies that have actually set up to help your transactions flow. They have great networks. They've built businesses to help you achieve your objective. So please do make sure you go and say hello to them. Let me just give you a little flavor for what you're going to be doing tomorrow. We have some great remarks from some of the sponsors, and please, a round of applause to the sponsors here. They've made so much effort to make sure this today goes on, and they have done it. Please have a look at them here. They're all here. Thank you so much. We've got some great remarks from people that have sponsored, as well as some ministers as well, including the Minister of Trade and Agribusiness. We have got a fireside chat focused on the 24-hour economy. We have panels on agribusiness. We have panels on manufacturing. We have panels on investment opportunities in the energy sector as well. And last but not least, carbon markets, forestry, and green investment opportunities in Ghana, as well as real estate as well. So please make sure you turn up tomorrow. As protocol dictates, we must have someone to close today's official as day one. And so I would like to invite to the floor Deputy Ghana High Commissioner, His Excellency Thomas Akwanas. Please come to the stage. Round of applause to close out Teas and Coffees exhibition. And as I said, the President will be here tomorrow with all the ministers, so please make sure tomorrow is not a let's go to work day, it's a let's get work done for Ghana day.
Thank you very much, Mr. MC. I would like to thank you all for coming. I believe we've learned a lot, and also we are prepared to invest in Ghana. I would like to thank our partners, the resource persons, the government officials for enlightening us in so many of our flagship projects. I'll say thank you. The main thanks or the main vote of thanks will come tomorrow after we wrap up. This is just to thank you for your time you've spent here. Thank you for your resources that you helped us with. And thank you for the knowledge that you shared with us. Thank you very much. God bless us all.